our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy.
Hello and welcome. We continue to move sideways in the market. You're watching India Market Close on NDTV Profit. I'm Harsh Saita. We continue to move sideways. 25,500 is where we are at the moment, 50 points higher from where we were yesterday. And we'll pull up the heat map as well. The Nifty Bank essentially doing nothing to aid the index. In fact, you'd see some of the financials actually lagging. A couple of heavyweights are actually pulling the index a little bit higher, but outside of that, we're not seeing a very large positive trend, at least in trade today either, and that's been the kind of week that we've seen as well. Apollo Hospitals, Hero Moto are the two top gainers, as you can see on the index. Some zing in auto counters, Hero, Maruti there, M&M also up there, Tata Motors also up there, so some bit of zing. Tata Steel is doing well, and I say this because we saw 4% on Tata Steel yesterday. A positive 4% move, and on top of that it's up 0.7 again today, 0.5% on both Reliance and HDFC. But look at the laggards, some of them being financials. JSW Steel was the other big gainer yesterday, but sitting in the red, 1% lower. And we're seeing some more with regard to retail, which is consumption facing names, and again then you have HDFC Life sitting right there. So that's the broad trend that's playing out on the Nifty. Let's pull up sectors now very quickly, and again you're not seeing any major movers either in the gaining side or on the losing side. Just 0.5% lower on the PSU banking index, no major move there. The Nifty metal down around 1/3%. Auto is the one which is standing out in trade today, and that too is just less than 1% higher. I mean, that's what's really standing out in trade. That's what I mean to say when I say that there's no big gainer or loser. Nifty IT 1/3% higher, Pharma also nearly 0.5% odd higher. So those are some outperformers in this market. Let's talk now about the broader markets, and let's pull up the advanced decline, see where that is headed, and we'll also see where the mid cap and small cap indices are headed. It's been a largely stable advanced decline ratio and very close to 1:1 right from the get-go, which is the start of the day after those initial jitters. But let's look at the Nifty mid-cap and small-cap indices. The Nifty mid-cap largely in line again, a 1/5% higher off the day's highs, and the Nifty small-cap around 0.5% higher. Some bit of outperformance being seen on the small-cap index. But it's a very range-bound day of trade, as you can see. So plenty playing out nonetheless. because there are some movers. BSE 500, if you can quickly pull that up before I bring in Kush and get some perspective. Those are some big movers in trade. So it's not like in the broader markets there's no action. There is some action, and we'll talk about some of those counters as we chug along on this show. But let me bring in Kush Bora to give us perspective. Kush, it's what's the direction at this point? We're not seeing a clear direction. You seem bullish, at least the last we spoke. Does the bullish trend continue in your view, or are you playing wait and watch?
Hi, Harsh. First of all, very good afternoon to
Good
you and to
afternoon.
all the viewers. Yes, the bullish, the bullish view very much continues. If you see, we spent nearly 6 weeks trying to cross above that 25,200, 25,250 mark. And, last week we did cross above that with some force, with some gusto. So some profit booking, some cooling off was par for the course. We are seeing that also. This is what VIX at 12 and a half does to the market. We've had a couple of sessions of fairly muted moves, barring yesterday. But this is what a low VIX does. So despite the kind of moves that we are seeing in the last couple of days, I remain bullish on the market, where 25,400, 25,500 still remain that support zone. As far as the expiry move for today goes, I think that's perhaps already done, because you had a good up move at the start of the session today. But now if you see 25,600, 25,500 has had a good call writing throughout the day, but also 25,500. So perhaps 25,500 is the pivot level, 50 points here or there, where the expiry could play out. But if you see positionally, I think there is still some upside, and I still maintain that 25,750, 25,900 should be your targets on the upside. Maybe just under 25,400 is where you keep that stop loss and create a positional long on the Nifty. The VIX caveat, is something that you just want to be mindful of, because a spike in VIX usually associated with fall in the markets that could perhaps play out in the coming days, but nothing to suggest otherwise that there is a major downtrend that is around the corner, at least as long as 25,250 is held.
Okay, on the Nifty Bank, Kush, what's the view there? Because a couple of days where we've seen it weaken a bit.
So, Harsh, the way I would see it is, even this had a good move, hit all-time highs, even when the Nifty hasn't yet, and 57,500. That's the level that, it has to cross before it makes those big moves, in the next coming days. Now, the concern, as always, lies in the components. HDFC Bank, after crossing 2,000, has given up, that level, continues to consolidate. ICICI Bank also not doing much. But the major concern now remains PSU banks, and in particular SBI, which is finding very difficult to cross that 820 mark. So big three consolidating, not giving any kind of a breakout. Perhaps that could be the norm for Bank Nifty as well, where on the upside you play for 57,500, 57,800, but perhaps with a sluggish kind of a momentum. On the downside, the key level to watch is first 56,500, where there is a 20-day moving average, and if that is taken out, 55,700 also comes into play. So yes, I remain a little bullish on this, but given how the constituents are shaping up, the momentum could be in question.
Okay, and your picks for this kind of a market?
Picks remain long. Plenty of action, Harsh, in the broader markets, at least. So now, if you see the metal space, which has been doing well, and we've given a couple of calls, on Hind Copper and SAIL in the past, and they've done well. Today, it's on Jindal Steel and Power. This stock too has had a good run. It's finding some resistance at higher levels, but for now, if you see, the upside trend remains very much intact. So for targets of 985, 1000, you could consider a long trade on Jindal Steel and Power with a stop loss at the 955 mark. The other one is Jubilant Ingravia. Here too, the stock has taken support multiple times at the 50-day moving average and rebounded higher. We've had the golden crossover of the 20 and the 200-day moving average come about a few sessions ago on the back of good volumes, and the stock continuing to gain strength. So for targets of 795, 815 with a stop loss around the 755 mark, Jubilant Ingravia is also long.
I want to talk about a couple of names, Kush. One is an SBI Life, and second is a Kotak Bank. SBI, slightly on the longer term chart, has done very, very well for itself. Kotak Bank as well. But do you believe that this is a pause for a renewed rally, or do you believe that now things look tough and there's going to be a bit of a cool off in these two names?
So SBI Life, I continue to remain bullish on. In fact, the entire pack, the life insurance pack, including the likes of ICICI Pru and HDFC, have done very well. Yes, what we are seeing on SBI Life could well be a brief pause because the weekly setup is suggesting a mild negative RSI divergence, but the volumes on the upside continue to remain healthy. This week, the stock is seeing a bit of a downturn, and the volumes haven't really picked up as much, so that's a healthy sign. So yes, the stock could well consolidate within that 1775 to about 1850 band. But as long as that is held, I think the medium-term structure for SBI Life remains bullish, and in 1925 2000 remain the target. If someone's holding positionally, Kotak Mahindra Bank, on the other hand, slightly different. It gives you those spurts and this goes into a longish consolidation phase. So has rarely formed a part of my pick, maybe once or twice in the last couple of years. So the same view continues, that the downturn that it sees is sharp and the consolidation phases are much longer. So I would prefer to stick to HDFC, ICICI, in the private names. And when it comes to the other banks, then you might as well look at Canara Bank, PSU in the Canara Bank and PNB in the PSU bank. So Kotak doesn't really fall very high on my pecking order. And yes, this profit booking round could turn into a consolidation phase for some time.
How do you play financials, Kush, therefore?
Very positively. Anything that is happening in terms of a mild downtick is more of a profit booking. Look at something like an LTF, L&T Finance, something that we've been bullish on for a while. 2 sessions of downturns, but on the back of very low volumes. 200, 195 zones still a strong support. So if you do get it closer to those levels, you should consider an addition in something like an LTF. Canfin Homes is the other candidate that can be considered for a long trade. So what we are seeing now is profit booking and some consolidation, because the run up in the financial names and across the board, be it home financiers, be it the insurance players, be it some of the NBFCs, they've had a good run and they're consolidating. Could be the July 9th effect. Investors want to stay light. Could also be the upcoming result season where you might want to just book some profits, stay a little on the sidelines. But other than that, the medium-term structure for some of these names is very much intact, and the dips that I see are more of profit booking than anything else.
Okay, Kush, thank you for those preliminary views. Stick with us. It's that time of the show where we go across, speak to corporate. It's management voice that we bring in at 2:10. We have Amit Jain, who's the Chairman, Managing Director, Arcade Developers, joining us this afternoon. Good afternoon, Amit. Been a while since we spoke.
Good afternoon. How are you?
Very well, sir. Thank you. So I wanted to start off with this new acquisition of Filmistan. It brings around 3,000 crore odd of GDV, but give us timelines. How quickly do the approvals come in place, and how quickly does development start there?
So we've already started with the approval process, and 2025 by this year end, we are expecting the approvals to be in place. And early next year, we expect to launch the project, 2026. The acquisition is complete and the plans are frozen on drawing board. Yeah.
Okay. Where does that take your total GDV to, Amit?
So this is in addition to the Thane acquisition that we did recently last month.
Yes.
So both the deals combined should touch a GDV of 5,000, and along with the other projects, we are looking at a GDV of 10,000 crore in coming times.
Okay. And how quickly do you execute the full 10,000 crore GDV?
We've set a target of 5 years from here to complete this pipeline.
And what's the margin like on this?
On an average, the margins are 20% in our company for the projects that we've done here.
And why Filmistan in particular, Amit?
Because this is amongst the last land parcels that is left in a matured market like Goregaon West, 4 acres of land parcel without any tenant. Majorly the projects that you see in suburbs or in MMR region are of redevelopment category. There is hardly any land parcel available. So this is amongst the last of clean land parcels available in Goregaon West, which is a very mature market. And it allows you to build a much premium product in terms of flexibility of planning. It allows you to build a very upmarket product, which normally is not possible in smaller land parcels, or redevelopment has a constraint of planning as per the earlier members, which is not there in a freehold land parcel.
Amit, how should one look at GDV? Because you've got 10,000 crore of GDV pipeline, 20% odd in terms of your margin guidance. How much of this is JDA versus fresh projects? And how should one look at GDV even in a JDA? Does it include the houses you have to allocate to existing tenants or not?
No, our 10,000 crore is only out of the sale proceeds of our goods, and the distribution is broadly 50-50. We do not have JDS, but we have redevelopment, society redevelopment projects, which is a pipeline of 5,000 crore, and the land side is another 5,000 crore. So it gives a clear visibility of raw material, for the company for the coming 5 years. Raw material is a very critical thing in real estate. So once you have these lineup of such good projects, it makes certainty of the ongoing year-on-year revenues.
And Amit, how quickly does the cash flow start to come in? Because 5 years is a long time for execution, and that will be your top line over the next 5 years is what I would assume. That ought to be the case. How does the cash flow stagger in is what I want to understand out of this 10,000 crore.
So once we start the project, once you have your approvals in place and once your project is RERA registered, we start the project, and no sooner you start the project, your cash flows start, and the cash flows keep coming in as the progress of the project takes place, on an ongoing basis. And we are not dependent on a single project for this 10,000 crore. It's split fairly balanced across a list and so the cash flows, very healthy with us.
Okay. So I believe we have you on a patchy line, Amit. While we fix that, it's very impressive guidance. What I want to also understand, in fact, from Amit, as he patches back in, is they've done 2 big projects already this year. So what's the outlook like with regard to project? That stock is perked up 4% in trade. There are 4 project launches in FY26. At least that's the expectation. And just to try and highlight for you, Arcade in general is broadly a low debt company. We've got just about 100 odd crore of debt on the balance sheet at the end of FY25, and they've done around 700 odd crore of sales in FY25. Amit, just trying to understand from you. So you've done 2 big ones this year already. How many more in the pipeline, and how quickly do they translate?
We are having a couple of redevelopment projects in the pipeline in coming times to come. And it's an ongoing process. Business development is an ongoing process. The BD team keeps on scouting for projects, and the launch team keeps on launching the projects. It's very cyclical. For now, we have a good lineup of projects. We are looking at 4 launches this year, as you just mentioned.
Yes, and what would be the completion time? How many projects get completed this year, and therefore, what's the revenue recognition which will happen likely this year? What are you estimating?
So we look at a 20% growth year-on-year basis. Last year, you just mentioned we did 700 crore of sales, and this year, basis 20% should be around 850 crore.
Okay, and will that continue for over the next 5 years? Is that the glide path?
Yeah. In fact, we are looking at a spike once these bigger ones are launched.
Okay.
It may beat that percent. Yeah.
And what about pricing? Is pricing holding up at all? You cater largely to Mumbai for viewer context. Is pricing holding up in Bombay?
Prices are very stable and consistent. Post this repo rate correction, in fact, the home loans have become very attractive, which is further helping the prices to sustain. Yeah.
Okay. And what's the kind of escalation you're seeing in prices going forward? Because some of the launches that you do today, a lot of the sales may actually happen a year or 2 from now. So just trying to understand how, what are you seeing in terms of price escalations? Is there any scope for that at all?
I wouldn't be speculative, but it should be minimum. It should beat the inflation. That is what I consider,
and
if not more. Yeah.
Right, and you have a great understanding of inventory as well, of course, because you have your ear on the ground. So what's the inventory looking like? How much is the pipeline, both you plus competitors plus the market, at least in Bombay? How's the pipeline looking like? And do you see this traction which is there currently to sustain? Because that may well impact price. So how are you seeing all of those dynamics?
Our selection of the project, we are very choosy to pick the projects. Our selection is such that they are lesser affected by the abundance in supply. We choose very mature and premium markets. The location is marquee, so it should not be affected by the abundance in supply. And majority of the supply is on paper. By the time you get occupation for the project, the inventory is almost sold most of the times. People have become very aspirational, the per capita consumption of real estate has gone up. People are looking at bigger flats. They are looking at changing the apartments very soon. It's become very aspirational. So all of the supply has been taken care of.
All right. Amit, thank you so much for coming in, speaking with us. Always a pleasure speaking with you. Thanks so much.
Thank you. Thank you so much. Yeah.
Okay. All right. So that's with regard to Arcade. That stock is booked up 4%. I'm going to take a quick call from Kush on that one. But before that, we have something interesting lined up for you. A lot of promoters have been selling their stake, and we've been talking about them on the channel, of course, but many have also been increasing their stake. The past couple of years, Anushi is here with all of the details with regard to these stake increases that are happening. So promoters on a buying spree, Anushi.
Right, promoters on a buying spree, that's the accurate way to describe it. And we have collected data over the last 8 quarters to see which are some of the companies in which we've seen highest change in terms of where the promoter ratio is considered. So if you take the BSE 500 in consideration, 24 companies have seen promoters increasing their stake. However, on the flip side, 149 companies have seen promoters decreasing their stake is what we are looking at. Of course, all this information has been collected with the help of Prime Database is what we are seeing. But let's see some of the top 5 companies wherein we have seen the highest increase. If you take BSE 500 in context, there has been a 58% of an increase since this March 23 levels. So in that context, we have Route Mobile right at the top, wherein there has been an uptick in terms of 16.5% in promoter stake increase. While in contrast to that, if we see FII and the DI change in positioning, FIIs have offloaded about 16% of their stake there. Polymedicure is another stock, 9% of an uptick here, followed by Bombay, Burma, GMR Airports and IFCI, seeing promoter picking up stake in the ranges of 6 to 8% from March 23 to the current quarter, that's March 25 levels is what we are seeing. While we are seeing some bit of changes in the FII and the DI stance as well, Polymedicure, we are seeing more of these enhanced changes in terms of the FII and the DII stake change, followed by GMR Airports also, wherein there's been a 13% of a downtick in terms of where the FII stake is in comparison with the promoter stake increase. But let's take this in context with the recent 4 quarters as well to see if these companies come in that list as well. So in this last 1 year, if you are looking at, we have Route Mobile, Polymedicure and GMR Airports in the list again, wherein the ratio that we've seen in terms of the 16% or odd so in Route Mobile, we've seen this change happening in the last 1 year period or so, followed by Polymedicure and GMR Airports as well. But we have 2 other counters in focus as well, which includes the likes of Adani Green and Adani Power, wherein promoters have picked up their stake by 3 to 4% as well. So these are the companies in which we have seen this activity in terms of where the promoter stake increase has taken place. But let's see how they have performed in terms of BSE 500. So BSE 500, while we did highlight that it has seen about a 56% or also of an uptick in the last 2 years. We have Polymedicure, Bombay Burma, GMR Airports and IFCI all recording strong gains in these last 2 periods, with IFCI seeing almost a 4x return in terms of where the stock price is concerned. Route Mobile being the only laggard in this list, seeing about a 31% of a downtick in terms of their stock performance is what we are seeing. In terms of how they fared in the key financial metrics in comparison with the 3-year revenue and the PAT CAGR picture. FY25 growth, if we see for Route Mobile, of 14% of an uptick. This is in contrast to the 32% of a growth it had seen in these last 3 periods itself. Poly Medicure majorly in line in terms of where the 3-year CAGR is concerned. Same with Bombay Burma is also what we are looking at, but it's GMR Airports in which we've not accounted for the PAT CAGR because of the negative numbers there. But in these two, we have seen comparatively growth moderating as compared to where the 3-year revenue CAGR is concerned. But moving on, moving to the next metric, if we are looking at, it's the valuations. Now, in contrast to the 2-year picture that we are seeing for the valuations, Route Mobile majorly in line, same as the case scenario that we are looking for Poly Medicure and Bombay Burma as well. For IFCI, we have taken the PB ratio in context, which is 2.6 times, again in line with the 2.7 times of a multiple that we have seen in this 2-year average period as well. So this is in terms of where the valuations are concerned and the overall picture of these 5 counters which have seen the most uptick in terms of where the promoter stake is concerned.
That's a very, very interesting piece. Thank you so much for that, Anushi. At least the kind of numbers that were flashing on your screen were super interesting and definitely stocks that we should keep on our radar. But Kush, over to you. I want to first ask you for a quick take with regard to Arcade, recently listed, but the 4% move today, does it change anything structurally, and if you have a call on the stock?
So not one that I've been tracking particularly in this space, Harsh, but a quick look at it would suggest there is a range on the downside 185 and on the upside about 200, where the stock hasn't really been able to break past for the last 15 odd sessions. But structurally, no, nothing changes. It was in an upturn, volatile market, but the stock has held its fort. So I would suggest, if you have a position, not a bad idea to continue holding on to this one. The stocks that we like in this space are Marathon, NextGen Realty, and Valor Estate. Some profit booking around the corner, but that is on the back of very thin volumes, so not too worried. In fact, that could be a level. These could be levels to enter into some of these names that have run up quite a bit in the last 3 months.
Okay, Kush, I'm going to cut this conversation short, slip into a break. Before I discuss this entire promoter buying spree that we just spoke about, but what we're going to do just before we go into break, we're going to listen in to Sridhar Sivaram. We spoke with him today morning of Enam Holdings. He's flagged that China's stronghold on global manufacturing as Foxconn pulls top Chinese talent from Apple's India plants is what he's spoken about. He's also fairly bullish on banks' financials in India. Let's listen into a slice of that conversation. We'll slip into a short break. See you on the other side.
China's annual exports to the US is say 450 billion. Add another 200 from Mexico, add maybe 100 odd from Vietnam. You're talking of $700-800 billion of exports a year, and all these get affected with the tariff. So this is the arm twisting that China is trying to do. Rare earth is the other one that they're trying to arm twist. As the D-Day is coming, they're trying to show who the boss is. But to be fair, their manufacturing is at such a scale and they have reached such heights. It's very difficult to believe that the world can live without manufacturing happening in China. So it's I think very interesting times ahead. It is not going to be easy for India to suddenly ensure or to hope that a lot of manufacturing will shift. Some will definitely shift, but there'll be a lot of challenges, roadblocks on the way. We like even the banks. We know that the next 2 quarters may not be that great, but the governor has given some bonanza in terms of CRR cut, so that helps them in terms of the earnings pickup. So even the banks, if you're willing to ignore the next 2 quarters, and we are hopeful that credit will pick up in the second half. So that's how we are looking at it. So we are okay with private banks, some few PSU banks.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
But
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Welcome back. You're watching India Market Close, and it's the time of the show when we bring in Somit to give us all the insights that he's been getting from dealing rooms, and that's on our segment Heard on the Street. Somit.
Well, yes, Bajaj Finance is the first stock that is on the list. Now, dealers are indicating that there are buy flows at lower levels for Bajaj Finance. HNIs have been accumulating this counter because 900 is oftenly seen as a strong support zone for Bajaj Finance. So around that level, we have seen some buying coming in, and off late the stock has corrected on expectations of a weak Q1 update. But now we are seeing some buying interest at lower levels is what dealers are indicating. When it comes to Tata Communication, now this is an interesting stock. The stock was up around 5% yesterday after Macquarie initiated coverage on the counter with an outperform rating and a target price of 2,300. But today the stock is down nearly 2% and dealers are indicating that there's a buzz on the street that the first quarter numbers could be on the weaker side, and hence we are seeing such kind of a downtick when it comes to Tata Communications in trade. For MTA Tech, dealers are indicating that there could be an order announcement very soon that could come in. For Natco Pharma, dealers are indicating that there could be an announcement that could come in from the company's side related to some acquisitions that they are looking to do, some international acquisitions that could come in in Natco Pharma. When it comes to delivery and ACC, dealers are indicating that there are buy flows on institutional desk for both these counters. Both FIs and DIs have been accumulating these counters in trade today. And lastly, when it comes to UPL, dealers are specifically saying that there are strong buy flows on the FI desk for UPL, and delivery volumes could be on the higher side for this counter in trade today.
Okay, thank you for that, Somit. Let's talk about all the ones he's spoken about buy flows on. One is a Bajaj Finance, then there is delivery, ACC and UPL. Kush, out of these four, are any of these looking interesting?
All of them.
All of them.
I think you missed out one. You missed out one other interesting one, which is Natco Pharma. Very interesting moves, and I must say, as is already well known, it's a very interesting segment, and in fact, even I look forward to this one. No, but just on a serious note, see, Bajaj Finance has a rising trend line support near the 900, 910 zone, as even Somit was mentioning. So yes, some buying could emerge, but my concern is on the higher side where 950, 960 is a bit of a resistance. So maybe a positional bet, 3 to 6 months view. But if you're looking for a breakout candidate, then yes, Natco Pharma is one, has a gradual, steady up move. Today it's given a breakout on the back of good volumes. Could have something to do with the chatter Swami just mentioned. So this is something that I will keep an eye out on for levels of 1025 and once that is taken up 1100 as well. That's the kind of risk reward ratio it's offering. Stop loss comes in close to the 900 mark. So Natco Pharma, very interesting. Delivery, yes. ACC also, giving a good move, but very keen on the moves that Natco Pharma has given. So keep an eye on that in particular, at least from a technical standpoint.
Okay. Let me switch over. We have Aditya Shah also joining us, Hercules Advisors. Aditya, Bajaj Finance at 900 odd. What do you make of it? 5 times price to book. Does it look interesting? It seems to be the case that there's a strong support at 900. I'll confirm that with Kosh specifically. But your view on a Bajaj Finance first off.
So really very expensive, but a great company to have inside your portfolio. Will be long-term compounder. Will continue to extremely well. The consumer finance boom that India is seeing, Bajaj Finance will be able to capture it over the next 5 to 10 years. So a good portfolio stock. The growth will slow down to 25% at some point, and that will be the steady state for Bajaj Finance. So good company should be inside your portfolio, but valuations are expensive at this stage.
900, Aditya, very simply put.
Sorry?
So do you buy at 900? Very simply put.
Yeah, so very expensive. So you need to buy I have a buy rating on the stock, and you buy it in a very staggered manner. You don't jump in and buy it all in one go. You buy it in a staggered manner so that if there is any fall, you can take advantage of it. Mind you, Bajaj Finance has had a time correction where valuations have corrected over a period of last 2 to 3 years, post which the stock has now broken out and is moving up. So buy it with a staggered in a staggered manner.
Kush, your view on BAF?
So, as I said, interesting moves. Rising trend line support comes in 900, 910, the levels at which is at currently, maybe a little lower, 890 as well, has acted as a support zone from where the stock has rebounded 3 to 4 times in the last month and a half. So, yeah, if you want to accumulate, major concern actually on this one is momentum and on the upside 950, 960 zones being a supply zone. So, not an immediate trade, but if you're in for a 3 to 6 month kind of a positional trade, then yes, you can consider because it's closer to the lower end of that range.
Okay. The other one that's really done extremely well, Aditya, is a UPL, and that's made it to Somit's list as well. From those 400, from those mid 400 kind of levels in April 2024, the stock has only gone one way, and quietly that too. Is UPL something of a turnaround at play, and at nearly 700, would it really warrant a look?
Unfortunately, over the last 3 months, I have not been able to track the stock, so will not be able to comment on it.
Okay, and what's your take with regard to this one, Kush?
Good moves, has seen a good accumulation in the last 5 sessions, price and volume action both supporting. But now for me, 690, 700 remains a zone where, you might want to perhaps wait up a little. So at this juncture, it's a hold, not a fresh buy. If you have a position, keep a stop loss at the 670 mark, continue to hold. Once it clears 695, 700, perhaps, then you could see fresh leg of up move. But up until then, there could be some supply that could, come in at higher levels.
Kush, what's the take on Bosch, up 6% today?
So I think there has been some traction in the sector. Even this stock has consolidated for a good month and a half. If you see 32,700 was a bit of a resistance on the upside. Today it's broken out of that. Now that said, however, not too disturbed by the 6% move. It's the next levels of 34,500, which are a resistance band. So I will not want to initiate fresh positions. However, if I would continue to ride on to this momentum with a stop loss near the 33,700 mark. it's given a breakout after a nearly month and a half of consolidation. So could well continue, but for fresh positions doesn't offer that exceptionally high risk reward ratio.
Okay, so that's the take on Bosch coming in, but stock of the day for sure is a Blue Star. The stock is up 5% as we speak, and Mahima joins us with what's keeping the stock in focus. Mahima.
Right, so there's a very interesting note by MK on Blue Star today, and basically the note summarizes their meeting with the management and key takeaways with regards to that. They've given their expectations with respect to how Q1 FY26 will fare for them. What they've said is that they're expecting 20 to 25% YY revenue drop in the room AC segment. This is because of early monsoons. And this is also on the back of high base as well. The revenue drop, however, will be overall partially be offset by a steady growth in commercial refrigeration is what the management has said. In terms of Q2 FY26 expectation, they're saying that they will see a slower offtake due to channel elevated inventory because of sales not happening in Q1. In terms of the RAC segment, they've said that the demand could rebound in second half of FY26 by festive season momentum, and plus the B rate, the B star rating will also have some impact there. So pre-buying could happen before the second half of FY26. In terms of the management guidance for RAC growth, they have said that they'll grow anywhere between 10 to 15% and EBITDA margins will be anywhere between 8 to 8.5%. In terms of the B rating that I was talking about, that is a government rating that will come out and will mandate a particular amount of star ratings for the AC companies, and this could possibly have a cost hike of roughly 7 to 8% for all of these AC players. So that could be one of the impact on Blue Star as well. Lastly, in terms of what MK is making of all of this, their view, they've retained buy with a target price of 1850. What they've said is that 15 years trend analysis, according to them, shows that weather-led demand volatility eventually slows down. It is cyclical, and weak summers typically are followed by sharp rebound in both volume as well as in terms of the stock prices. Plus, largely they're keeping their estimates also unchanged for now. And lastly, as I mentioned, the target price is 1850 for Blue Star right now. So this is the overall view as to why Blue Star is seeing uptick in trade today.
Okay, thank you for that, Mahima. Both Blue Star, Voltus, both of those buzzing. Aditya Shah, do you have a view with regard to the AC sellers, if I can call it?
So all of these companies should do well over a period of next 3 to 5 years. Mind you, I talk from a long-term perspective. From a long-term perspective, the demand for refrigerants, particularly AC and refrigerators, is only going to move up. So companies like Blue Star and Voltas will continue to do exceptionally well. However, the valuations on particularly Voltas are really very expensive. So I'll tend to wait for any correction and then enter. But the outlook for both of these companies continues to be really very strong.
We've seen a sudden downtake with regard to the Nifty. Expiry day move or anything to be worried about?
No, purely expiry day move. I would read it as that. We were talking about how 25,600, was seeing some call addition. Now what's happened is 25,500 has had the highest base as we speak right now on the call side, but the put base for 25,500 has vanished. So I would wait and watch. 25,400 still remains, as a significant put base. But this is more, I would attribute this more to expiry than anything else. So I wouldn't be too much perturbed, especially if you see the VIX, which is not really perked up, only about half or 0.6% higher. So not too much to be worried about. Still in that 25,400, 25,500 consolidation range.
Tamanna, are you building positions right now? Would that be a call to take since you have 25,400 breached on the lower side?
Hi, Tamanna. I missed the initial part of the conversation.
I'm saying that is it the right time to build positions since we've seen a breach below 25,400 on the lower side as well?
Yeah, I remain bullish even now. I mean, how we spoke earlier, which is 25,250 was the key resistance level. We took that out and we are now consolidating with a negative price for the last 3 sessions. Positional bet, the risk reward ratio is still favorable. 25,250, keep that as your stop loss and play for higher levels. So I would play for a long trade, a positional long trade on the Nifty even now, at least till 25,250 is held. Bank Nifty, on the other hand, is consolidating, and the constituents aren't really playing out, as strongly. HDFC, ICICI, and SBI, all three of them. So perhaps a wait and watch on Bank Nifty, but Nifty, as long as 25,250 is held, a long trade can be considered.
Okay, let's take a bit of a global view as well, and a good time to pull up what's happening in European markets as we get to Michael Ingram, market strategist, who's joining in on the show. Mild positive on the DAX. Remember, it's all about trade deals right now, and clearly Europe is not on the list of trade deals we might see in the next 48 hours or so. India definitely is. So Michael, thank you so much for speaking with us here at NDTV Profit, and let's start really with that big factor which is being watched. A possible mini trade deal is what we're hearing between India and the United States. Would it be seen as a big boost after what we've heard about the Vietnam deal?
Well, I mean, we obviously have to see what the details are. The devil, as they say, is always in the details. I mean, it's significant in as much as that Vietnam is a significant offshoring country for China over the last decade or so. So that this also has implications for a possible US-China trade deal, which I think is probably going to remain the most intractable of the sort of bilateral negotiations which are taking place. That said, in terms of the actual market impact, well, the market's really looking at a sort of a glass half full situation anyway. You're seeing most stock markets at or close to all-time highs. In many markets, particularly the US, they've already assumed that earnings growth this year is going to slow significantly, maybe 5% on the S&P 500, but it is convinced we'll see a significant acceleration into 2026, maybe 15% growth. So the market's already discounting really a soft landing. We're also seeing this on the rates market because the rates markets are also discounting an acquiescent Fed. They're assuming a degree of policy error from the Fed after the last FOMC, and perhaps looking up to 3 quarter-point cuts on Fed funds rates by the end of the year. Now, whether or not any of this bears out, of course, is a big question. Yes, I've said that the stock market's looking buoyant, but you do still have, for instance, gold still trading at very elevated levels. You're still seeing a very, very weak dollar, which has implications for the global financial systems. And interestingly enough, even though you're seeing sort of retail enthusiasm for risk assets, you're also seeing a lot of insider selling as well. So some mixed pictures out there and relatively elevated valuations.
Michael, hi, this is Harsh here. So did I hear you say that you're finding gold elevated, and this is at a time when there's heightened uncertainty, and that uncertainty is likely to persist given the US administration and its stance, and also the fact that central banks are continuing to stack up on gold? So give us the thesis there.
Yeah, well, your observations are absolutely correct. I mean, you talk to reserve managers. Yes, there has been some leakage into non-dollar assets. We've seen that in terms of flows into the Eurozone, but fundamentals of the Eurozone aren't great either. I mean, if you look at the most recent PMIs, yes, they've been tracking up so far this year, but we've spent almost 3 years in below 50 on a European manufacturing PMIs, which is not great. So this is a rebalancing to some extent. But, as I say, growth isn't great in much of the Eurozone. India, I'd have to say, remains a standout in terms of, raw GDP growth at this point. But yeah, I mean, by default almost, because they can't go into treasuries, because we haven't seen this decline in interest rates that was being anticipated rather for the last 2 years. I mean, the rhetoric from Powell remains, yes, we're patient, but there's a lot of uncertainty out there. So it's meant that a lot of the reserve rebalancing has gone into gold, and that's what's helping to support the gold price above $3,000 a troy ounce. So yeah, it's a real dilemma for asset allocators at the moment. There does seem to be the equity market is painting a very different picture from the other assets, I would say. And at some point, this bifurcation is going to be resolved, and generally speaking, it's resolved in a relatively painful way. But one thing I think I'm fairly sure is that we are going to see a significant uptick in volatility as we make that particular journey.
Just on a completely separate note, Michael, because your perspective on this would be interesting. What's happening with the London Stock Exchange right now? Reports that AstraZeneca, one of the most valuable companies listed on the FTSE, might be looking to move its primary listing to the United States. And this will deepen a crisis there. For our viewers who are not familiar with what's going on, please add some perspective to this.
Yeah, well, this is part of a broader decline, I would say, of the UK as a listing venue. My personal feeling, but it is mirrored by a number of other commentators, is that the UK, both as a real economy and as a stock market, remains over-regulated. We still have an archaic taxation scheme called stamp duty on stock market purchases, though there are ways around that, dealing on swap, for instance. And I think the fundamentals of the UK economy are looking, frankly, quite shaky. I think the fiscal situation here is increasingly in focus. And I think if we didn't have this sort of dollar weakness actually helping non-dollar asset markets, particularly UK gilts, then we've had a much more difficult time of it at the moment. But yeah, we've got a budget coming up, I think probably in October this year, and I think that could well be a flashpoint for a broader sterling crisis. But in terms of the narrow, your question in sort of a narrow sense, it's quite simple. People who are listing in the UK feel they could get better valuations elsewhere, and bearing in mind what sort of valuations we're seeing in the US right now, I can understand how AstraZeneca is looking to shift its primary listing.
Okay. Thank you so much, Michael, for speaking on all of this and more. Markets are completely flat right now. In fact, some weakness there on the key indices, of course, but even so, Nifty seems to have recovered a fair bit. Let's just pull up the Nifty chart for the day. Yeah, topsy-turvy, all over the place. No direction till we don't know exactly what's happening with the India-US deal. In fact, Rishabh is joining us. He's tracking that story very, very closely on NDTV Profit. Rishabh, what is the kind of timelines we're seeing? You reported this morning that we could see some kind of a mini trade deal in the next couple of days.
Correct, Tamanna, that's what we're picking up from official sources, is that within the next 2 days, we will have some sort of a mini trade deal or an interim trade deal at least. This is before the first tranche that is expected in either September or October of this year. This is what the two leaders had agreed to, Trump as well as Prime Minister Modi. What we're seeing also is that these are the faces that you're seeing on your screen right now. These are the faces that are behind all these Indo-US trade talks that are going on. From the Indian side, of course, there's Prime Minister Narendra Modi. After that comes Commerce Minister Piyush Goyal, and after that is the chief negotiator, who's also, by the way, a special secretary in the Commerce Ministry, as well as the incoming Commerce Secretary. He will take charge as the Commerce Secretary this September. That is Rajesh Agarwal. On the American side, we'll see that it is obviously President Donald Trump that is leading the charge there. Then we'll have Piyush Goyal's counterpart on the other side of the Atlantic is Howard Lutnick, the Commerce Secretary for the US, as well as the chief negotiator for the US. On their side will be Brendan Lynch. He is the assistant US trade representative for South and Central Asia. So all these trade talks that have been going on for a while now, it has been Rajesh Agarwal who has been spearheading these negotiations for India. Over the past week or so now, they've still been in Washington, and from the American side, it's obviously been Brendan Lynch who is leading these negotiations.
Inside there, so you could expect something. Rishabh, would it be wrong to say that we may see something on Saturday evening India time?
No, not wrong at all. In fact, what we're seeing, what I'm also listening, is that it could be as early as tonight. So we have to be on all fours. We need to be very, very alert on any time it could be made public over this weekend.
Okay, thank you so much for that, Rishabh Bhatnagar. On top of that story, and NDTV Profit will be getting you every aspect of that story as we move ahead. All right, let's take a look at what's happening in the markets. I mean, a very, very dull day. Harsh, and I'm seeing the biggest hit coming in, I would say, from PSU banks, thanks to, of course, Punjab National Bank. Those updates far from giving any comfort. Indian Bank, we saw some updates coming in. That wasn't great as well. Just pull up PNB if we can. PNB and Indian Bank in that aspect, in that it will be in that index, but also M&M Finance. All of it looking a little dismal.
Yeah, it did, Tamanna. In fact, what I wanted to actually do is take a quick rapid fire with Aditya Shah on his views on some of these, because he tracks lenders closely. Aditya, do you have a quick view with regard to PSU banks and the kind of numbers that have been coming out? At least Indian Bank was half decent. PNB was a bit dismal. But quickly, your take.
Very contradictory to what the finance minister advised the PSU banks last week, that they should be really very aggressive. I don't think that PSU banks, anybody should be invested in PSU banks at this stage. Whatever re-rating on the PSU banks had to happen has already happened over the last 2 to 3 years. I do think that SBI and Bank of Baroda are two companies, and for that matter, Canara Bank also. These 2-3 companies are the ones where on the PSU bank you should really be, particularly SBI. I think they will continue to do really well. The entire pack, other than this, is a clear avoid for me at this stage. There's not enough traction available. There's not enough valuation comfort available now. Mind you, many of these banks still trade below book value, but there's a reason for which they trade below book value. So from my perspective, sticking to SBI would really help.
Okay, so within PSU, stick to SBI. What about the NBFCs? You've spoken about Bajaj Finance. M&M Finance also came out with its numbers. How are those looking? And especially on the asset quality side, do you expect a fillip this time around, an improvement where NBFCs is concerned?
After lending NBFCs again will see a sharp drawdown in their asset quality. That asset quality will start to stabilize from this quarter onwards, and the asset quality will see an uptick over a period of next 2 to 3 quarters. So I don't expect any fillip in this quarter. What I do expect is that the formation of new NPAs will start to slow down. So from my perspective, if you are looking at an NBFC, then Bajaj Finance will be at the top of the radar. Something like an Arman Financial, which is now available at 1.2 times price to book. That looks really very interesting to me, but that's a whole play or microfinance lending NBFC. So you need to be really very careful. Then again, Cholamandalam Finance is again a very fantastic company where you can be invested for the longer period of time. So Bajaj Finance, Cholamandalam Finance, Arman Finance are some companies where you can look at for building positions.
Any of these on the charts for you, Kush?
For me, I think it's the LTFs and AB capitals of the world, that stand out. So yeah, I will take these dips that come about in some of these names as an opportunity to create fresh longs.
I just want to see what's happened to HDB Financial, the new listing from yesterday, and is it really holding up? If you can just pull that quickly before we get to other buzzers. Not how bad. 863 right now for HDB, another 2.5% up. So slow and steady, but definitely an upward move is what we have been seeing. All right, there are a lot of buzzers this afternoon, and Jasmeet joining in for more details on. Let's start with Bajaj projects, Jasmeet. Why is it in focus?
Well, right, the stock is up 5% in trade today on the account of mega order win by Power Grid. Well, the order is to provide transmission lines of 400 kilowatt at the range of 99 kilometers. While this mega order ranges between 300 to 400 crores, and the time period for this order is 18 months. Well, company recently also received an ultra mega order for 400 crores for 400 kV transmission lines. While the next one is Saxoft. Well, the stock is up 10% in trade on the account of volumes, while it's been running at a 30-day volume average of 33 times. Now, understand what does the company do? The company is into providing digital transformation and technology management solutions, and its mainly business caters to mid-sized firms in USA and UK. While as per the financials, the company's revenue stands at 883 crores as of FY25 and EBITDA at 16% margin. While company's outlook is pretty strong, where they expect a strong double-digit growth in FY26, and the vision is for 2030 is to reach $500 million revenue. While the last one on my list is NACL, while the stock is up 5% in trade today, and it was 5% up yesterday as well on the account of Coromandel Industries. While they received an CCI order for acquisition, the company is set to acquire 53.13% stakes in NACL, and the FY25 revenue for NACL stands at 1,200 odd crores, while the revenue for Coromandel stands at 24,000 odd crores. These are the stocks and the reason why they are buzzing in trade today.
Okay. So some buzzers there. Coromandel has completely given up all gains. NACL is fine, the acquiree is fine, but the acquiring company with 53% stake is just lost all of its buzz today. Kush, before we let you go, any top calls that you're seeing at this point, and would you want to place any bets for tomorrow's trade?
The bets for tomorrow's trade would be on the long side on the Nifty, but you might just want to wait because we are close to the low point of the day. That's the only concern. Otherwise, not an issue. And Jubilant Ingravia, the call that I gave at the start of the show, still doing well, still holding up. And while the market's volatile, this one's gained ground in the last 4 sessions. So continue holding on to Jubilant Ingravia. To reiterate the targets, 795, 815, and 755 is where you place that stop loss.
Okay. All right. So, Kush, thank you for those calls. Aditya, I also wanted to quickly have your view with regard to a couple of other buzzers which have within the financials itself. And RBL Bank, there's been plenty of chatter. Is that a pocket where, or rather one of the stocks where you're seeing value? And within even the small and mid-cap banks, a CSB came out with numbers. How are you seeing those? Just give your quick views with regard to a couple of those.
There is some minority investor who's going to come in and take some stake. RBL Bank has been grappling for many years from NPS. The new management has come and cleaned up the book. Now it remains to be seen who comes into the bank in order to take some stake. So from my perspective, this is a stock on the radar. It's a stock that you can watch out for. Then the next stock is CSB Bank. Fantastic numbers, 20% deposit, 36% gold loan growth, 31% AUM growth. Fantastic numbers. That's why the stock has done pretty well over the period of last 6 to 12 months. So from my perspective, I like the strategy that CSB Bank is employing, being very aggressive on the gold loan side of it and building up the secured book while also lending to unsecured side of. So positive on CSB Bank. Watching out for RBL Bank.
Okay, so that's the take with regard to a couple of those lenders. But let's go across. Time for bull versus bear. Nykaa is the stock in focus with regard to bull versus bear. Mahima's here. There's obviously some bit that has happened today morning, and 4% lower. It stayed that way, but it's a great day to get that perspective. Mahima.
Right, so the stock is down today because Harinder Par, who is one of the early investors in Nykaa, has exited his share partially, around 2.3% stake he's sold. His stake stood at around 4.97% in March, so his stake will come down to around that 2.5% mark. Earlier in August 2024 also, his family had offloaded around 1.4% stake in Nykaa, so that's why the stock is down today. But with respect to where the bull versus bear case stands for this particular counter, recently in their investor presentation they had mentioned that they aim to grow at mid 20% levels, but considering that beauty margins will see pressure because of higher delivery costs, and this is because of the new Nykaa Now expansion that they're doing, so margins will be under pressure going forward. The next one, in terms of the overall fashion growth expectation, they're expecting break-even by FY26, mid to high single-digit growth in terms of the Nykaa fashion margins by FY28, and by FY30 they're aiming to grow margins at around 10% for Nykaa fashion. But overall, they have moderated their guidance for Nykaa fashion in terms of net sales growth. Now the guidance stands at around 2 to 3 times, which was earlier around 2.5 to 3.5 times. So that is something that CLSA and JP Morgan also did not like, and even Macquarie did not like. In terms of their overall store expansion, they plan to expand to 500 stores by FY30, but in terms of the overall competitive outlook, that is something that could overall go ahead and put pressure on Nykaa in terms of margin as well as profitability, because they will have to go ahead and increase their marketing spends. So that is one concern here, and of course the competition coming in from Tira could also be something to most certainly watch out for. Lastly, in terms of their ambition to grow overall their organic portfolio at a CAGR of 30%, they're growing and the gross merchandise value that they've targeted is 6,000 crores by FY30. But even if we look at the FY27 estimated valuations, that stands at around 127 times. Currently, it stands at a P of 880 times. So Nykaa in the near future, even 2 years down the line, not looking very cheap. Lastly, in terms of where the street cred stands, there are 13 buy calls, 4 holds and 9 sells right now, upside of hardly 3% for Nykaa. The street right now is also a little cautious with respect to where the entire growth aspect is and plus where the valuation stands. So this is with regards to where the bull versus bear case of Nykaa stands.
Okay, thank you for that, Mahima. So Nykaa, the stock in pain today, obviously, because there is a block deal and one of the early investors is exiting their position. Rajesh Palve now joins in the conversation. He's SVP Technical and Derivatives Research at Axis Securities. Of course, Aditya Shah continues with us. Welcome, Rajesh, to the conversation. Since we've been talking about Nykaa, let me start with your view on Nykaa. Is there a buying opportunity here?
Good afternoon. So there is some profit taking is happening in this counter, and now stock is approaching again back towards 20-day moving average support area, which is placed at around 198 zone. So I think 198 is a very crucial level for near-term perspective. If it breaks below 198, we may see furthermore, supply pressure up or down move towards 192 kind of zone. But at this juncture, if it's able to defend this 198, some pullback action should be there, because if we analyze the overall structure for near term to short term, there is a series of higher top, higher bottom formation. So which indicates that buying action is sustained buying action is there in this counter. So around 198, one can buy with stop loss of 195 in the pullback. 210 to 212 would be the immediate hurdle. If it's able to take out about 212, then rally can extend towards 225.
Okay. So, okay, that's the story with Nykaa. Aditya, is this something that you track?
Yes, I track the company. Okay, the growth is not spectacular. However, the valuations of the company continue to remain really very expensive. So in the near term, I would like to avoid the stock. Wait and watch. Let the valuations take a time correction. From there on, you need to look at the stock. For me, it's just too expensive right now to invest.
Aditya, sorry, want to quickly get this piece out of the way. DCM Shriram, any idea what's happening there? Fertilizer company, stock up, what, 12% in trade today? And any pick within the fertilizer space at all that you would have?
I don't have a view on this company or this space, so I will not be able to comment on it.
Okay, fair point. Okay, Rajesh, zooming out, or rather, give us your take with regard to a DCM Shriram. What's your view with regard to what you're seeing on charts?
So there is a fresh breakout in this counter, almost consolidation, long consolidation. Now stock managed to view breakout of almost 12-month kind of consolidation, and looking at this breakout, we believe that till stock is now holding above 1380 zone, there is a possibility that we may see furthermore follow-up buying action towards 1460, 1470 kind of zone. So those who have already long in this position, so can hold the position. Trailing stop loss would be around 1400 to hold the position.
Okay, what are your levels that you're seeing on the indices, Rajesh, and your picks at this hour?
So Tamanna, there is some profit taking at high level for Nifty. Looking at the data, the major call writing activity is happening at 25,500, 25,600 strikes. So these levels are likely to act as an immediate hurdle for the stock, for the indices Nifty. If we able to take out about 25,600, then there would be some short covering action we may see in the Nifty, and then possible rally can extend further. But overall structure is bullish. Buy on dips would be the strategy at this juncture also, as we have weekly option expiry for Nifty. So some profit taking at high level, as call writers are very well intact at 25,500, 600 strike. On the downside, we are almost trading near to the major put based concentration of 25,400. So these level may act as an immediate support area. If we break below 25,400, then a possible down move of another 50 point towards 25,350 would be there in the especially due to this expiry. So 25,350 may act as an immediate support area if he breaks below 25,400. Overall, buy on dips would be a strategy. Your stop loss should be placed at 25,300 for positional trader. For Bank Nifty, the immediate support is now placed at 56,700, 56,600. So these two levels are very important and critical for Bank Nifty. If we fail to hold 56,600, then we may see furthermore supply pressure. But looking at the overall structure on the short-term charts, I think 56,000 should be intact in this corrective move, and some pullback action we may see from those level. On the higher side, 57,300 is the key supply zone. Until the 57,300 not taken out by Bank Nifty, we may see some consolidation in range of 56,700 to 57,300.
Okay, and top picks this afternoon?
So Biocon is looking attractive. Stock managed to give breakout of its a multiple supply zone on the weekly chart, and looking at the breakout and long built up in derivative data, we believe that Biocon may extend its gain. Possible target towards 394 to 400 we could see in the near term perspective. So Biocon is buy with stop loss of 369. And second stock that we like is CSC, series of higher top higher bottom formation in CSC. Stock is comfortably holding above to all its long term short term moving averages. The way stock has managed to give breakout of its previous swing high of May 2025, I think here also we may see furthermore continuation of up move 187. We are projecting target for the stock. One can buy with stop loss of 175.
And news flashing at the bottom of your screen with regard to MobiKwik, Tamanna, that they've got a securities broking license to operate as a stock broker. That stock is clearly seeing an uptake on the back of that announcement.
Yeah, that's a big one. And yes, it's just the entire space. By the way, since we're talking about this announcement, Jio BlackRock has got its license last few days. Motilal Oswal, just look at that stock. AUM has crossed $1.5 billion. I think there was a figure.
1.5 lakh crore.
1.5 lakh crores is what the AUM has crossed on Motilal Oswal. So that stock is buzzing. But this is a big one actually. MobiKwik Securities Broking has got its SEBI certificate. Let's pull up the one MobiKwik stock for you also. And interesting segue. Now this is a company that you see, it's in the payment space. I don't know, this is a natural progression for them. Does it make sense? Why do you want a broking license?
Because you have a large customer base to cater to, and this is easy pickings. It's value-added financial services which you're trying to get into. Because MDR is not coming in, some of these companies may want to leverage on their platform business to try and do more business with their customers and get in that, or rather grow faster through these ancillary services which they do. Aditya Shah, AMCs as well as one MobiKwik Payments, anything that interests you within this space and anything that's looking attractive from a risk reward perspective as well as from a growth perspective, growth at the right price?
Particularly not. So what the payment companies are really doing is that payment particularly per se is not profitable. You need to build services around it which are really very profitable. For example, selling insurance, selling broking services, selling mutual funds. That's exactly what companies like MobiKwik or even Paytm are really doing, where Paytm is building up a loan platform. So from my perspective, there's nothing to get excited about here. Brokers have a challenge. Jio is coming in, and we've seen wherever Jio has entered, they tend to disrupt the services. Just as Zerodha, broking percentage or the money that brokers make can all set to be shrink if Jio starts and gives a lot of freebies to customers. So from my perspective, I am not positive on any of the capital marketplace per se. Mutual funds, yes, mutual funds, something like an HDFC AMC or for that matter, a Nippon AMC do look good to me. For a period of next 3 to 5 years, these companies will continue to do exceptionally well. So capital markets, no. Broking services, capital markets, no. Mutual funds, yes.
Top picks, top favorites here in this space. 361 WAM also buzzing today. Quite a few coming in. Competition heating up. We know that some in the pipeline for IPOs. What are you liking right now, Aditya?
Where in the broking services?
Yes, yes, yes.
In the broking services, nothing as such, nothing I want to invest in right now at this stage. As I said, mutual funds is something that looks really very interesting to me, not in the broking space.
That space, in your asset management space.
Yeah, in the asset management space, as I said, HDFC AMC, Nippon AMCs, these both continue to look really very good. And as we know, ICICI AMC is also set to launch its IPO. So that one also looks really very interesting too.
Nippon AMC and HDFC AMC. Rajesh, what about you when you're seeing some of these capital market plays buzzing today? Are you thinking this is a good opportunity to exit if you've made that kind of move or have managed to be on part of that move?
So I think capital market related theme is is doing good, and the way most of the stocks are shaping up, it clearly shows that this trend is likely to continue furthermore. The way Aditya Birla Sun Life AMC is now trading, now it's moving in upsloping channel on weekly chart. The same kind of behavior we are seeing in the UTI AMC 361 as well as Motilal Oswal. All these stocks are moving in upsloping channel on a weekly chart. So that clearly shows that there is a sustained buying action is happening in this counter, and I think we may see continuity of trend for all these stocks. Looking at the technical structure, if I want to go for any fresh buying, so I think Motilal Oswal Financial is looking attractive. The fresh breakout is taking place on a weekly chart, and the way stock is now trading above 900 level, I think if it continues to hold above these level, possible up move towards 980,000 kind of level we may see. So one can buy this stock with stop loss of 900. Again, from AMC perspective, Aditya Birla Sun Life AMC is also looking promising. And here also we believe that till stock is holding above 800 mark, there is a possibility of 860 to 870 target in the near term perspective.
Okay. And within this space, would also be good to understand, Aditya, do you have a view with regard to a JM Financial? Because that one was the other one where there's been plenty of buzz. Stock has also seen a decent rally.
Really interested in JM Financial as well. We have seen a lot of problems for JM Financial also coming up. So rather than JM Financial, I would tend to be interested in something not like a Motilal Oswal or an IIFL Securities, IIFL for that.
Okay, so since we're talking about the capital market space and new entrants coming in the capital market space, we have an exclusive update on a much awaited NSE IPO. Sources tell my colleague Shrimi that the IPO is likely around Diwali. Listen in.
While NSE is inching closer to its long pending IPO plan, which could be materialized around Diwali, there is a crucial step remains, which is NOC from SEBI. Now, sources tells us that NSE, which offers 1600 crore as a payout for settlement, the NOC, the no objection certificate, which is a mandatory requirement for any MIIs to come after the settlement order being weighed and issued by the regulator. Sources also hinting at that currently the settlement review is with high-powered internal committee, and after this committee will review the process, the suggestion will go to whole-time member of SEBI and the discretion at the whole-time member to take a call on accepting that settlement order. But in a nutshell, the NOC will come only after the settlement order will be issued, which is hopefully 2 to 3 months time, which typically takes in such processes. Now, this is also somewhere we are getting sense that since all the pending cases are being hanging for some time, that also includes some past court cases, so that will take a lot of time to sort of have a view on that, and that is why the order will maybe taking some time here in this particular case as well. MII is having a mandatory requirement to have NOC if they are looking for public listing, so in this case as well the NSE has to wait for the settlement order, and then only no objection certificate can be secured from the regulator.
Okay, thank you for that, Shimi. That's, of course, an interesting update coming your way. Aditya, is there a view you have on the exchanges, a BSE?
So NSE is a fantastic company. Once the IPO comes in, it is a great investment. BSE particularly is really very expensive. It has run up massively over a period of the last 3 to 5 years. So I tend to avoid BSE and tend to wait for NSE's IPO to come into investing.
Okay. Rajesh, do you have a view with regard to a BSE and where you expect it to go, what levels to look out for?
So BSE is in a uptrend only. There was some corrective move, but again, stock has resumed its upward journey again. And looking at the near-term, short-term structure, we believe that till stock is trading about 2650, 2700 zone, I think trend is likely to exhibit on the bullish side, and possible rally can extend again towards 2950, even 3000 level. So buy on dips would be a strategy for BSE. Even for MCX is also looking very promising, and the way stock is now consolidating after a sharp rally, I think if it's able to hold above 8900, 8850 zone, so I think here also we may see resumption of rally towards 9200 to 9300 for MCX also.
Okay, BSE in focus, MCX in focus. I mean, that entire space, that capital market space is doing okay. Not so much the rest of the market. Range bound. I wouldn't say too much to worry about either. Some retailers are doing fine. I want to pull up the V2 retail stock, and we had an interesting conversation today with the company. It's come off its highs, about 0.5% still in the green, because the business updates that have come in were very, very strong for V2 retail. Listen into a slice of this conversation we had with Akash Agarwal, the company's whole-time director.
There are 3 levers that we're working on. So one lever is the one that we just mentioned, is moving from 1,000 rupees per square feet sale to a 1,200. So that helps with the EBITDA margin. The second lever is, you're spreading out the head office and the warehousing cost to an even larger store footprint. So that also helps increase the EBITDA margin. And the third lever is a better product mix and selling more at full price. So that increases the gross margin by 100 basis points. So that is another lever to increase EBITDA. Even with the shift of the Eid, we showed a 51% revenue growth. So I think we will beat those revenue guidance numbers that we spoke about.
Okay, so this was extremely interesting, the entire conversation, and if you haven't heard it, I'd urge you to go listen.
Can I tell you my favorite part of the conversation?
Please.
He was very clear about what his strategy was, because unlike other retailers who put out business updates yesterday, Bazaar Style and Avenue, V2 has been, an upside and very positive. Strategy is very simple. He says we sell items for 300 rupees that look like they're worth 1,000 rupees. Simple. In a nutshell, it tells you what this company is about. They've not gone in for an e-commerce strategy yet. They are not too keen. They're saying, let's think about it. Now, at a time when everyone wants to sell online, they're clear that they don't want to. I thought that was pretty interesting. And their average selling price is also very, very affordable. You spoke in detail to this company recently as well.
Very impressive. In fact, they've said they have sub 200 stores currently. They plan to go to 700 by FY30. They'll only do 100 stores every year. They'll allocate 100 crores to stores, 100 crore to inventory as a result of the store opening. So it just looked extremely simple in terms of the way the conversation went. But it trades at 90 times, and this is where Aditya comes into the picture. And I want Aditya's view on this. Aditya, if I were just to run the numbers for the next 2 years, it's 20 times FY27. Of course, risks are there on that 20 times earnings, but it looks excellent because thereafter there are 3 years of very strong growth, which they continue to pencil in. How do you look at the business, and how do you therefore judge that this is an appropriate value? And within the value retailers as well, if I zoom out, are there any favorites on your list?
So who knows what happens in FY27? So from my perspective, if you are trying to pay a 90 times multiple for a company penciling in the growth, and if the growth really slows down, the stock market will smash the stock. So from my perspective, the company is doing fantastically well. The update that they have given, they've grown 51%, really very good. But the stock price is too expensive. Amongst all retail companies, the stock price continues to remain really very expensive. You say Trend, for example, that is also very expensive. It trades at about 200 times price to earnings multiple. super duper expensive. So I tend to avoid this entire space. If growth slows down for some reason or the other, there will be a problem. Mind you, growth may not slow down because RBI is pushing in a lot of liquidity into the market, and the monetary policy is also very beefed up. But that cannot be a reason to buy these stocks at super expensive valuations. So from my perspective, these stocks are a clear.
As a query coming in from one of our viewers on our YouTube page, and by the way, you can watch us on YouTube as well. We're available everywhere for you to watch. So Chumki Banerjee Mishra has written, guys, is it still worth buying HDB Finance shares? I thought that's an interesting question. Aditya, you'd like to take that?
Yeah. So fantastic company, HDB Financial. Over the past 3 years, it has done tremendously well. However, the valuation at which the company has IPO'd is about 3.5 to 3.7 times price to book. Really looks expensive to me at this stage. You need to wait a little bit for correction. Once a correction comes in towards the region of 750, that's a good opportunity to buy. But a good company will do well over a period of next 10 to 15.
There will be correction to 750. That opportunity should also come.
Never say never in the market. Now, in the market, a lot of things can happen. We're going through a phase where NPAs have spiked up for a lot of smaller lenders. Particularly, HDB Financial has had a difficult phase, let's say in 2020 and 2021, when their NPAs spiked up. Mind you, HDB Financial borrows at about 8% and lends at about 12 to 15 to 16%. So they are lending to a highly risky class of borrowers, and it cannot, and it is not immune to NPAs also. So NPAs can come, stock price can go down, and anything can happen in it.
Anything happen. Never say never for an upside or a downside in the markets. I thought that's interesting. Your BTST calls, Rajesh.
So Astra DM is looking very promising. Stock is almost trading at all-time high trajectory. The way stock is making high top, higher bottom formation, and the way throughout this session, if we look at the behavior, there is a sustained buying action throughout the day. So Astra DM, one can buy for BTST point of view, 665 to 670 would be the BTST target. Keep stop loss towards 628 to buy Astra DM.
Hospitals, Aditya, do you like hospitals? From an investment perspective, apologies.
From a valuation perspective, my topic here would be an Apollo Hospital. Yatharth Hospital also looks interesting to me, and a KEM also looks interesting to me. But right now, both of them are in a middling phase. So I keep a close watch on them. But Apollo Hospitals continues to be a steady compound.
Okay. Aditya, if I were to ask you to pick one sector in this market that you'd buy at this point.
Capital goods is something that could be very interesting. Within the capital goods space, you can look at something like a road builder, an NCC, Ahluwalia contracts, or a PSP projects for that matter, a value pick. Adani has come in here, and over the next 3 to 5 years, the company will develop. So capital goods continues to be one of my top picks. Stocks priced reasonably well are something that would be interesting.
Okay. If you're going to see, Aditya, in the next couple of days, maybe by Friday, Saturday, if you're going to see any clarity on the trade deal, would there be any positional bets that you're seeing? Auto, pharma, IT, these would be some sectors that come to mind?
So pharma and IT are two companies, are two sectors that are going to benefit out of a trade deal. Particularly, IT was pricing in a rise in cost of doing business. If that settles down, that is extremely good. And pharma, particularly the generic companies, the companies like Sun Pharma, Lupin, or Aurobindo Pharma, these companies are at a risk of Trump tariffs. And if pharma tariffs settle down and India has a trade deal with the US, these stocks could really see a push. Also, pharma and IT continue to be two places where you have to be, which could benefit out of a trade deal between India and the US.
Okay, so Lupin is one of those. Rajesh, for you, top pharma picks, I would say, because since we're talking about identifying pharma as one structural idea there, Sun Pharma especially.
So from pharma space, if I go with the technical setup, DV's lab is clearly outperforming stock, and I think here we may see continuity of uptrend. We are projecting target towards 7,200 on a positional perspective for DV's lab. So this one can focus on this with stop loss of 6,700. Another stock where we are focusing at this juncture, that is, Dr. Reddy. Dr. Reddy is also looking promising after a corrective move. Now stock is almost holding its 200-day and 50-day moving average. So I think some pullback action from the current level is likely to be there in this counter, and one can buy this stock with stop loss of 1,240. On the higher side, we believe that 1,350 to 1,400 would be the target for Dr. Reddy in this pullback.
Okay, so those are a couple of pharma names for you, but thank you so much, Rajesh and Aditya, for joining us this afternoon. We'll let both of you go on that note. And it's expiry day, but the move isn't really strong that we've seen. And that's, I don't know, glass half full, glass half empty. But we're closing at the day's, very close to the day's low, maybe not at the day's low. 0.25% lower on the Nifty. Let's pull up the intraday as well. The Nifty Bank is where some of the pressure actually resides. There you go. Just off the day's low, 25,384 was the day's low. We're just about 10 points from there. So very, very close to the day's low and well off the day's high. And that fall from the day's high is likely the expiry day move that we've seen. Let's look at the Nifty 50 heat map as well and see what pockets have done badly. Financials clearly one of them. As you'll see, Kotak, SBI Life, Bajaj Finserv. So the Fin Nifty clearly seeing some bit of pressure, no doubt about that. But pharma, auto are a couple of pockets which have actually done well on a day like this. 1.8% up on a Dr. Reddy's, Apollo Hospitals up 1.8 as well. I want to quickly mark out a Hero, Maruti, as well as an M&M and a Tata Motors, all of which have done reasonably okay on a day like this. So that's the couple of pockets which have actually done well. Outside of that, well, it's been a tough day, frankly. And, it's not been a tough day, but it's been a flat day. But that's just how the week has also been. We're in a bit of a consolidation mode at this point. Let's look at the sectors as well, and let's pull those up very quickly. The consumer durables has done well yesterday, continues to do well today. Auto, pharma, no surprises there. IT flat, in fact, it's closed in the red as we speak. FMCG also mild positive. But PSU banks, metals, realty is where a bulk of the pressure is, if I can call it that. Frankly, it's far and few in terms of pressure. Media is the one that's standing out today, 1.5% higher. Let's look at the advanced decline overall on the NSE, on the exchange, and that's how the advanced decline has. It was quite stable for most part of the day, and then it's reversed a bit. But we've closed close to the 1:1 ratio where the advanced decline is concerned. Let's pull up the Nifty small cap and mid cap indices as well. Well, flat on the mid cap, very, very close to flattish on the mid cap. Let's pull up the small cap, and that has seen some bit of outperformance and no jitters whatsoever, and that's likely the positive, at least on the broader end of the spectrum. Let's look at the BSE 500 top gainers, top losers. Those are some names for you. That move from DCM Shriram, just volumes driving that move, 19% higher. Aster DM was the other one, 8.5% higher. Motilal also doing very well in trade for itself. VST, Raymond and FSN, which is Nykaa, seeing some bit of a cool off. Raymond, not surprised, because the kind of moves that stock has shown this week, that 5% downtick, not looking too bad for holders from last Friday. Let's now quickly look at what to look out for tomorrow in trade. And there you go. Those are some macros for you that you should have on your radar. US unemployment will be one of those. Don't see a major move there. Those are some adjustments in dividend which will come through tomorrow. And those also, SKF, Sona, Axis, Nestle. There you go. Paras Defense, there's going to be a stock split, 1:2. And there's going to be a bonus issue in Sharda Motors. All of those adjustments, and Aztec, there's a rights issue as well. So all of those adjustments to happen tomorrow. But frankly, completely out of time on India Market Close today. From Tamanna, myself, everyone who puts the show together, thanks so much for watching. But do you want to know everything that's happened in markets today? Stay with us. We have Himakshi who will take you through all of those updates in Market Express.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show, viewers. So today in the Dalal Street, it saw a choppy session of trade. Nifty managed to shut shop near 25,400 levels. Sensex lost over 150 points. Most sectors ended in the red, with realty, PSU banks and realty being the top laggards. Meanwhile, auto and media lead the gains, ending the day in the green. Now talking about the Indian rupee, so it surged to a 1-month high, gaining 44 paise to a close at 85.27 against the US dollar earlier today. This marks its strongest level since May 27, after closing at 85.71 yesterday. The rupee's rally reflects growing investor confidence amid favorable market conditions. Nestle India is spicing up its production game with a brand new Maggi noodles line at its Sanand facility in Gujarat. Now, the company has invested 105 crore rupees in this expansion, which will boost its annual noodles production capacity by 20,300 tons. Currently, Nestle's total Maggi capacity stands at 1,700,000 tons per annum, with about 77% of that already being utilized.
Coromandel International is set to expand its footprint in the agrochemical space after the Competition Commission of India approved its acquisition of 53.13% stake in NACL Industries. Now, the deal valued at around 820 crore rupees will see Coromandel buy out the majority share from NACL's promoters with an open offer to public shareholders to follow. NACL, which reported revenues of 1,235 crore rupees in FY25, is known for its crop protection products and contract manufacturing. Coromandel, with a much larger FY25 revenue base of 24,085 crore, aims to fast-track its entry into contract manufacturing, broaden its product portfolio, and cement its position as a leading player in the Indian crop protection industry. Aurobindo Pharma's biosimilars push gets a major boost as its subsidiary Curatech Biologics has received European Commission approval. So the approval is for Dazubliz, a trastuzumab biosimilar used to treat HER2 positive breast and gastric cancers. Now, this marks Curatech's third biosimilar approved by the EMA and its fourth overall in Europe, reinforcing the company's growing presence in oncology care. So the approval follows a positive recommendation from the European Medicine Agency in April. Meanwhile, Aurobindo's Dutch subsidiaries Pharmacin BV and Agile Pharma BV have merged, but with a combined FY25 turnover of just 26 crore rupees, the move has no consolidated impact on the company's financials there. Hindustan Zinc has delivered a record performance in the first quarter, mining 265,000 tons of metal, a 1% increase year-on-year. However, refined zinc output slipped 4% to 202,000 tons and silver production dropped 11% to 149 tons, mainly due to lower input from the SK mine. So on a brighter note, wind power generation surged 24% to 134 million units thanks to higher wind velocities and seasonal factors. Hindustan Zinc Alloys also posted its best ever quarter producing 5.1 thousand tons. Despite the challenges in refined output in silver, the company's mine metal and renewable energy numbers highlight its operational strengths this quarter. Bazaar Style Retail has also posted a strong performance for the April to June quarter, with revenue from operations jumping 37% to 3,777 crore rupees. However, the same-store sales growth dipped by 3% in quarter one, largely because of the Eid festival. It shifted to the previous quarter, impacting footfalls and the sales comparisons. A normalized basis, SSSG still rose 11% in quarter one. Though that's a slowdown from the robust 20% growth seen in the previous quarter, the company also continued its aggressive expansion, adding 22 new stores and taking the total store count to 232. Overall, Bazaar Style Retail remains a solid growth path even as the festive timing affects quarterly comparisons there. Bharat Electronics Limited, or the BEL, has received a buy rating from Asian Market Securities with a target price of 550 rupees, implying a 30% upside from the current levels. So the firm is expected to sustain strong growth driven by steady execution of its robust 71,650 crore rupees order book and its dominant position as a key platform integrator in India's defense ecosystem. With direct leverage to rising defense budget allocations, BEL is forecast to deliver a revenue and EBITDA compound annual growth rate of 19% and earnings growth of 20% from FY25 to FY28. Currently trading at a price to earnings ratio of 44 times FY28 estimated earnings per share. Punjab National Bank's quarter one business update has prompted Citi to maintain its sell rating with a target price of 101 rupees, citing muted advances growth of 1.3% quarter on quarter and deposits up 1.4%. Overseas advances remain flat and Citi expects the RAM segments that is the retail, agriculture and the MSME to drive growth, but projects a 2% QOQ decline in the net interest income and a 12 basis points fall in the net interest margin due to a higher share of EBLR-linked loans. So the Morgan Stanley also remains underweight on PNB with a target price of only 100 rupees, highlighting that loan growth has decelerated and in line with the broader system, domestic loans have risen 1.3% quarter on quarter and 9.7% year-on-year, while deposits grew 1.7% quarter-on-quarter and 12.2% year-on-year. The bank is gaining market share, but likely at the cost of lower spreads as growth moderates and margins come under pressure. Tata Power has been ordered to pay over $490 million in damages and interest to Claros Capital Partners after losing an arbitration case. So the dispute stems from a proposed coal mining project in Russia, where Claros alleged breaches of confidentiality and non-circumvention clauses in an NDA. Now, the award includes a 5.33% simple interest from November 2020 and an additional $8.29 million in legal costs. So Tata Power says that it is reviewing the award and may challenge it. The arbitration process began in 2020 and concluded with hearings in February 2024. At its AGM, Tata Steel outlines a focused strategy, tightening costs in Europe while pushing for expansions in India. The company plans major efficiencies at its Netherlands plant and aims to turn around its UK business by 2026. Despite pressure on steel margins, Tata Steel stays optimistic, eyeing stable coal prices and steady spreads. Back home, it plans to boost mining capacity and grow volumes in the coming years as well. Macquarie says Indian financials are stable and resilient, expecting nearly 15% EPS CAGR over 3 years. So margin issues are seen as temporary, with large private banks preferred. PSU banks may lose deposit share and see EPS decline by FY26. Macquarie is also bullish on general insurers but cautious on life insurers due to regulatory overhang. So the brokerage firm's top picks are HDFC Bank, Axis Bank, AB Capital, PSC, Shriram Finance and LIC. Nykaa is also seeing a promoter block deal as Harinder Pal Singh Banga plans to offload a 2.1% stake worth 1,198 crore rupees at a floor price of 200 rupee per share. So Banga held a 4.97% stake as of March end, and this follows a 1.4% stake sale by HS and Indra Banga in August 2024. Tata Motors June car sales hit their weakest point since late 2021, pulling down the company's quarterly average to a 3-year low. The slowdown raises concerns just as the industry braces for muted growth in FY26. Still, the company stays upbeat, banking on new models like the Altroz and Harrier EV, with Sierra lineup also on the way to rev up demand and regain momentum. CLSA's Lawrence Belanco highlights that Nifty continues its upward march after breaking out of a tight trading range. So the recent breakout supports an upside target of 26,333 with immediate resistance near 26,277. So among stocks, Ultratech Cement is identified as a promising buy candidate in this momentum setup. Kotak highlights a striking trend in Indian equities. Inside RS are exiting, but retail investors and DIIs are stepping in. So this insiders out, outsiders in pattern is driven by price agnostic buying from retail participants who continue to accumulate despite elevated valuations. The result, well, a changing ownership landscape as public hands grow stronger. Morgan Stanley stays bullish on India, calling fundamentals strong but underpriced. Despite lagging in the global bull run, the firm expects India to outperform emerging markets in the medium term. It favors financials, consumer discretionary and industrials while staying underweight on energy, materials, utilities and healthcare, making it a stock picker's market with focus on domestic cyclicals. Sources tell NDTV Profit that SEBI is stepping up action against stock manipulation driven by social media platforms. So the market regulator is probing several cases involving unregistered finfluencers promoting stocks via Telegram and YouTube without regulatory approval. So with multiple investigations underway, SEBI is expected to issue orders in 4 to 5 cases shortly. In an NDTV Profit exclusive, sources say that the GST Council is considering a major revamp, scrapping the 12% tax slab to adopt a streamlined 3-tier structure. If approved, several goods may shift to either the 5% or 18% bracket. The matter is expected to be taken up at the Council's upcoming meeting, signaling big changes ahead for the indirect tax regime. The government plans to sell MTNL assets to state and central entities without an auction, opting for a simplified valuation process to speed up monetization. So this move aims to bypass the lengthy bidding procedures that often delay asset sales. Initial valuations of select MTNL assets are estimated at 6,000 to 7,000 crore rupees. The sale will be phased to help repay MTNL's mounting debt of 33,568 crore rupees. So separate framework for private buyers is still under discussion, while valuation surveys are ongoing in Delhi and Mumbai. A mini trade deal between the US and India is expected within the next 2 days, with talks intensifying in Washington. So the Indian delegation has extended its stay to finalize negotiations. The US is seeking greater access to India's agriculture and dairy sectors, while India is pushing for relief in labor-intensive exports. Officials say the doubling trade with the US is unlikely without broader tariff reductions. So the deal could mark a key step in strengthening bilateral economic ties. The US imposes a 20% tariff on the most Vietnamese goods under the Trump-era deal. So with coffee notably not excluded. So previously taxed at mid-single digits, the new duty raises cost for US consumers despite falling global coffee prices. Vietnam exports over 35% of its coffee to the EU, while the US accounts for around 7%. Analysts say that the tariff offsets the benefit of lower prices and may prompt exporters to explore alternate routes like Singapore. So the US handling of Brazil, its top coffee supplier, will also be key. IL&FS has approached the NCLT to cancel Brookfield's 1,080 crore bid for its BKC headquarters. So the bid made through Kronos Properties required Brookfield to maintain performance guarantees until a definitive agreement was signed. So however, Brookfield failed to renew the guarantee in April, prompting IL&FS to seek its removal as a successful bidder. So the move could reopen the bidding process for the prime Mumbai property. The Ministry of Information and Broadcasting has revised its TRP guidelines, opening the television ratings market to OTT platforms, digital distributors, and big tech firms. So this shift from a closed system aims to foster competition and innovation in audience measurement. So the new rules eliminate outdated clauses, bar rating agencies from consultancy to prevent conflicts, and prioritize unified, transparent viewership data across TV and digital platforms, benefiting advertisers. Foxconn is reportedly pulling back hundreds of Chinese engineers from its Indian iPhone plant, potentially slowing local training and tech transfer. So the quiet move may tie into Beijing's limits on outbound tech and comes as Apple preps iPhone 17 production, raising concerns about cost and efficiency in India. TIE, that is TIE Bangalore, has joined hands with Aerospace India Association to launch a dedicated platform that connects startups, large companies, and academic institutions in the aerospace sector. So the aim is to fuel innovation, tackle real-world industry challenges, and strengthen India's path to become self-reliant in aerospace technology. Swiggy is likely to shut down its small business platform, Minis, by August 10. So launched in 2022, Minis offered a zero-commission model for small brands and home businesses. It moved from the Swiggy app to a separate site in 2024. Despite supporting over 65,000 entrepreneurs, the platform may soon close as Swiggy continues to streamline operations following the shutdown of Genie and licensing of its private labels. Del Monte Foods, a household name for over a century, is seeking bankruptcy protection. So the 139-year-old company, known for its canned fruits and vegetables, is struggling as more consumers turn to fresher or cheaper alternatives. To keep things running during the process, Del Monte has secured over $900 million in financing. So this will help the company operate as it looks for a buyer and works through its sale. Mahanagar Gas has made it easier for domestic customers to submit their gas meter readings. The company has rolled out a new service that allows users to send their meter reading through WhatsApp. Now customers can also simply reply to a message from MGL's official WhatsApp account by sending a clear photo of their PNG meter. So this is expected to help with timely and accurate bill generation. HDFC Bank CEO Shashidhar Jagdishan has taken his legal battle to the Supreme Court, seeking an urgent hearing to dismiss a fraud case filed against him by the Leelavati Kirtilal Mehta Medical Trust. So the Supreme Court quickly agreed to hear the matter tomorrow. This comes after the Bombay High Court earlier this week refused to fast-track the case, stating that there was no urgency and scheduling the next hearing for July 14th. Dubai has completed its first piloted test flight of an all-electronic air taxi, marking a major leap in urban mobility. The aircraft, developed by Joby Aviation, carried one pilot and is designed to seat 4 passengers. Despite soaring temperatures over 43 degrees Celsius, the test flight was smooth, showcasing the vehicle's resilience and comfort. The air taxi can fly up to 160 km at 320 kmph for offering a 10 to 12 minute ride from Dubai airport to Palm Jumeirah, slashing travel time from 45 minutes by road. So the service is expected to launch commercially in early 2026 with vertiports under construction across key city hubs. Rescue efforts continued for a third straight day in Himachal Pradesh Mandi district, where 34 people are still missing after heavy rain and cloudbursts triggered massive landslide and flash floods. So the torrential rain earlier this week washed away 14 bridges, nearly 150 houses, and left 11 people dead, most of them in Mandi. Authorities fear the death toll may rise as hopes fade for those missing for over 48 hours. The weather department has also warned of a moderate flash flood risk in 6 districts, including Mandi, Kangra, and Shimla, till Friday. The Supreme Court has sent a clear message to those who engage in risky driving. Insurance companies are not required to pay compensation to the families of drivers who die because of their own mistakes during stunts or reckless driving. So this ruling came as Justices P.S. Narasimha and R. Mahadevan rejected a plea from the family of a man who died when his car overturned due to his own high-speed negligent driving. A British F-35B stealth fighter jet remains grounded at Thiruvananthapuram airport 19 days after an emergency landing due to bad weather and low fuel. So the aircraft, part of HMS Prince of Wales carrier group, later developed a hydraulic snag. With local repairs unsuccessful, the UK is now considering airlifting it aboard a C-17 Globemaster, a rare move for such jets. So the $110 million aircraft has become an unexpected tourist magnet and meme sensation. Meanwhile, a 40-member UK team is en route with specialized equipment to attempt final repairs. Markets are also closely monitoring developments on Trump's massive tax cut bill. The US House of Representatives moved a step closer to voting on the bill after Republican leaders managed to overcome opposition from the conservative members who had threatened to oppose it. The bill, which was first passed by the House in May, narrowly cleared Senate on Tuesday by a single vote. So it is expected to add $3.3 trillion to $3.4 trillion to the national debt. Meanwhile, the US Senate also struck an AI regulation ban from Trump's mega bill. The Trump administration is putting a pause on over $6 billion in federal education funding. So this includes money after school programs, teacher training, and English language support. According to a memo from the US Department of Education, the final decision on funding for the upcoming school year hasn't been made yet. Wang Ning, the creator of the wildly popular Labubu dolls, becomes China's 10th richest billionaire as his net worth soars to $22.1 billion, up from $7.59 billion in 2024 as per Forbes. So the collectible toys have taken the world by storm, driven by limited edition celebrity endorsements and the blind box trend. So a rare Labubu doll recently fetched for $150,000 at auction. So the brand's global demand and strong resale value continue to fuel its meteoric rise. China is slashing production across several industries to curb overcapacity and destructive price competition, with the solar sector leading the move. Starting July, major solar glass manufacturers will cut output by 30% as prices fall below production costs. The policy aims to stabilize markets and protect industry health. Indian firms like Borosil Renewables could benefit from reduced Chinese supply, potentially gaining pricing power and market share. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as Sanjana Chauhan brings you Profit 360 on the other side of the break.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
The Nifty and Sensex closed lower for the second consecutive day. Benchmark indices underperformed the broader market indices. Nifty PSU Bank falls for the second consecutive day, making it the worst performing sector for the day. The National Stock Exchange is inching closer to its long pending IPO, which could materialize around Diwali, subject to regulatory clearance. Sources say an interim trade deal between India and the United States is likely to be finalized in the next 48 hours, with negotiations underway in Washington. Government sources tell NDTV Profit the Foxconn disruption is temporary and will only last a month. This is as Foxconn Technology asks hundreds of Chinese engineers and technicians to return home from its iPhone factories in India. Sources say the government has decided to do away with the auction process for the sale of MTNL assets to state and central government entities. A US-based AI founder accuses an Indian techie, Soham Parekh, of working at multiple startups simultaneously under false pretenses. The INB ministry is looking to bring amendments in the policy guidelines for television rating agencies. Sources say SEBI is speaking with Google and Telegram to curb the activities of unregistered investment and stock market advertisers.
Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. Nifty and Sensex closing lower for the second consecutive day. SBI Life Insurance and Kotak Mahindra Bank were the top losers in the Nifty. Benchmark indices, meanwhile, underperformed broader market indices. But for a detailed roundup, let me go over to my colleague Harsh.
Well, the index itself saw a bit of pressure today and it was expiry day. So some of that move can be attributed to the expiry day as well. From 25,500, we fell below the 25,400 mark. And that seems to be where the weakness seems to lie. And that's where we dropped to. We closed very, very close to the intraday low as well. So something to keep in mind. We'll need to understand whether we start above 25,400 or not tomorrow, because that's an important level to look out for. But that's on the index. Let's talk about certain stock sectors which were buzzing. One, financial services was the one pocket which continued to be under some bit of pressure. The heavyweights too didn't aid the index at all today. What we saw though in terms of positive moves, auto, pharma were the two places where there was some positivity, at least where the Nifty 50 index constituents are concerned. So some of those sectors did well in trade today. And even when we pull up sectors, that's what you'll see. Outside of media, within the broader market universe, where the Nifty media was up 1.5%, pretty much all indices sectorally were range bound, plus minus 1%, not more than that. So a fairly range bound day of trade, a fairly range bound market as well. Let's now look at how broader markets did, and it was a flattish move where the breadth was concerned right towards the end. But for a better part of the day, there was a slight positive bias where the market breadth was concerned. Now let's talk about the Nifty mid-cap and small-cap indices. The Nifty mid-cap closed around 1/5% higher. The Nifty small-cap did a little better, so there's some bit of outperformance there as well. So those were, that's the way in which the day went by. Metals, realty were a couple of pockets which didn't do as well today, but again nothing majorly negative in that sense. In terms of movers, a couple of them big movers. Mind you, there were even business updates which came through. I'm sure that there's plenty on the channel that's been spoken about that, but business updates was the one focus area, including in the financial space. And there were some big movers. DCM Shriram was one of them, and Aster DM was one of them. And the BSE 500 will kind of reflect some of those big losers and gainers.
Right, Harsh, thanks so much for that. Meanwhile, Sridhar Shivaram, investment director at Enam Holdings, is placing his bets on large private and PSU banks, citing their strong fundamentals and improving profitability as key reasons for his bullish stance. Let's listen in.
We like even the banks. We know that the next 2 quarters may not be that great, but the governor has given some bonanza in terms of CRR cut, so that helps them in terms of the earnings pickup. So even the banks, if you're willing to ignore the next 2 quarters, and we are hopeful that credit will pick up in the second half. So that's how we are looking at it. So we are okay with private banks, some few PSU banks.
And it is a story that is rocking Twitter and Silicon Valley. An Indian techie named Soham Parekh is going viral on social media. He's being called a scam and a fraud for working at different places simultaneously. In other words, moonlighting. Tweets are buzzing by his name, CEOs are expressing shock and disdain, and by now there is a whole big controversy surfacing by the name Soham Gate. But this story has two intriguing sides. To start with, how did he manage to get jobs while already working with multiple firms? Were thorough background checks not done? And second, is it really wrong to work in different places at the same time? This dichotomy is exactly what is dividing support and criticism for Soham. But for more on this, let me quickly go across to my colleague Himakshi, who is standing by right now to give you a background of who Soham is and the allegations that are being leveled against him. Himakshi, let me come to you now.
Absolutely, Sanjana. So 1 techie and 4 jobs. Yes, you've heard it right. So let's dive straight into the viral moonlighting case. Firstly, who is Soham Parekh? So Soham Parekh is an Indian software engineer who reportedly holds a bachelor's degree from the University of Mumbai. a master's degree from Georgia Institute of Technology. On the paper, he looked like a dream hire, but his resume boasted stints at top AI startups like Dynamo AI, Union AI, Synthesia AI, and Allen AI. But behind this glowing CV was a storm brewing. But what is he being accused of? Well, multiple startup founders now accuse Parekh of moonlighting, and that is secretly working at 3 to 4 startups simultaneously without informing his employers and scamming multiple startups by not disclosing it. So the founders allege that he manipulated the system to land multiple jobs. Now let's look at who accused him and of what. Firstly, Suhail Doshi, who is the co-founder of Mixpanel, founder of Playground AI, says that 90% of Parekh's resume was fake. He was fired within a week. Flo Crivello, CEO of Lindy, echoed the same. Matthew Parkhurst of Antimetal, Nicole AI of Fleet AI, and Adish Jain from Mosaic all are backing the same story. Hired him, discovered moonlighting, and fired immediately. So one even called him a liar, Sanjana. So in this remote first world, Soham Parekh has become the poster boy for the darker side of tech hiring. And a story is setting off major alarm bells on the background checks, resume fraud, and startup hiring hygiene. Back to you, Sanjana.
Right, Himangshi, thanks so much for that. Indeed, 1 coder, 4 jobs. But like you rightly said, the internet seems to be divided on whether this was moonlighting or moon scamming. We'll continue tracking that story and bring you all of the development. Moving on to our top focus this evening, Foxconn Technology Group has recalled hundreds of Chinese engineers and technicians from its iPhone factories in India, a move that threatens to derail Apple's aggressive production ramp-up. Over 300 Chinese staff, crucial for training and technical operations, have left the southern India plants in the past 2 months, leaving Taiwanese support teams to oversee the transition. The sudden exodus, reportedly linked to Beijing's tightening grip on technology and labor exports, is expected to slow local workforce, training, disrupt production timelines for the upcoming iPhone 17, and raise short-term costs, posing a significant challenge to Apple's plans to shift more manufacturing out of China. And there is some breaking news coming in. However, the ministry is seeing, the sources are in fact telling NDTV Profit that they are seeing this as a temporary disruption. My colleague Shrimi bringing us more on this. Shrimi, we understand that the recent disruption at Foxconn is something that government sources are potentially looking at as being temporary, just a bump in the road, also adding that maybe India is well poised to handle it. Give us all the details.
Yeah, clearly, Sanjana, what we are picking up from the top sources in METI is that the government is not pressing the, panic button as yet. And in fact, they are saying that there's no cause for concern, calling the disruption temporary and pointing out that India has sufficient manpower, with local machine manufacturing also picking up the pace. The other thing is, which sources is highlighting at this point, that Foxconn technician regularly coming from, China, US and Taiwan, and so there is no as such shortage which, affect the overall manufacturing at these bases. Moreover, several companies have started manufacturing machine already, and at most this appears to be a temporary disruption which could last for over a month or not beyond that. In fact, Foxconn recent move to, recall 300 engineers to China may be linked to its government decision to strengthen the supply chain is what hint we are getting at this point. And in fact, from the Foxconn side, there are some indication coming in that they are planning to hire 500 to 1,000 Indian employees, making the count to 40,000 at these manufacturing bases by this month itself. Now, sources also hinting at that since it's a temporary disruption, it could have some impact on the delay part, but it's just a temporary one and it won't last for long. And in fact, they are saying that Apple FY26 plan remain ambitious, and if you see that the tech giant, the US tech giant, is already targeting 27 billion production value from India, and that will continue. There is no change in that estimation and projection. And the ministry is anyway examining the move and will intervene as and when it's needed at this point of time. But it is very important here that after this China authority is kind of indefinitely holding up key machines in the recent past, we have seen in the case of rare earth, where the restrictions are coming as far as exports is concerned. So clearly this is follow up from there, and such employees are recalling. So clearly the government is watching this move, and we are tracking this story closely, Sanjana.
Shrimi, thanks so much for bringing us that update. We'll continue tracking how this actually impacts or disrupts Apple's India push. But for now, government sources telling us that all is well and India is actually poised to deal with this very temporary disruption. Shrimi also bringing us the report on the NSE that is inching closer to its long pending and awaited IPO, which could now materialize around Diwali. This is subject to regulatory clearance, like securing an NOC from SEBI. And to tell us more about this, let me quickly go back to my colleague Shrimi.
While NSE is inching closer to its long pending IPO plan, which could be materialized around Diwali, there is a crucial step remains, which is NOC from SEBI. Now, sources tells us that NSE, which offers 1600 crore as a payout for settlement, the NOC, the no objection certificate, which is a mandatory requirement for any MIIs to come after the settlement order being weighed and issued by the regulator. Sources also hinting at that currently the settlement review is with high-powered internal committee, and after this committee will review the process, the suggestion will go to whole-time member of SEBI, and the discretion at the whole-time member to take a call on accepting that settlement order. But in a nutshell, the NOC will come only after the settlement order will be issued, which is hopefully 2 to 3 months time, which typically takes in such processes. Now, this is also somewhere we are getting sense that since all the pending cases are being hanging for some time, that also includes some past court cases. So that will take a lot of time to sort of have a view on that, and that is why the order will maybe taking some time here in this particular case as well. MIIs having a mandatory requirement to have NOC if they are looking for public listing. So in this case as well, the NSE has to wait for the settlement order, and then only no objection certificate can be secured from the regulator.
Thanks so much, Shrimi, for that. And on to another NDTV Profit exclusive. In a major policy shift, the government is scrapping the lengthy auction process for state and central entities interested in acquiring MTNL's assets. Now, this move comes on the heels of escalating process by the Mahanagar Telephone Nigam Limited employees, who have launched a phased agitation demanding clarity on their future as MTNL services are integrated into BSNL. The employees' core concern: job security and a transparent roadmap amid the ongoing merger. For all the latest updates and what this means for MTNL's workforce and potential buyers, let me quickly go straight to Aishwarya for the inside story.
Well, debt-ridden MTNL has been reeling under pressure for a very long time now. Here's what we're picking up from our sources as far as MTNL's revival plan is concerned. The government has decided to do away with auction process for the state and central government entities. MTNL assets will be offered at simple valuation to the government buyers or those entities with the state or the central government. Now, the move is aimed at cutting down lengthy bidding as well as valuation process. which often takes months or even years. The initial valuation so far that has been assessed through a survey across Delhi as well as Mumbai of the MTNL assets is pegged at about 6,000 to 7,000 crore. This is just an initial figure, and tranches of survey are still underway and will happen in phases in the next couple of months. The framework, although for private players or private buyers, those interested in buying properties or land assets of MTNL, is still under consideration. As far as the DOT is concerned, the MTNL asset monetization will be done in phases, as I mentioned, to repay the mounting debt. MTNL's debt has surpassed almost 33,000 crore rupees as of today and has been defaulting across the various banks and lenders that have provided loans to MTNL of over 8,500 crore rupees. Now, what's important to note also is that a total of 280 MTNL assets and BSNL non-core assets are to be monetized, but only 220 of them will actually be monetized under this plan, is what we're learning from our sources. Valuation surveys are being done both across Delhi as well as Mumbai to speed up the process.
And it's time for yet another NDTV Profit exclusive. A group of ministers chaired by Bihar Deputy Chief Minister Samrat Chaudhary, mandated to look at GST rate rationalization, is considering scrapping the 12% GST slab as part of an overhaul plan. Items like butter, ghee, fruit juice, almonds, processed foods and budget hotels may shift to either the 5% or the 18% slab. Now, the council is expected to take up rate rationalization in its upcoming meeting. My colleague Shrimi brings us all the details.
Well, the proposal is actively under consideration to eliminate 12% tax slab, as a part of major restructuring of GST tax structure and moving towards the 3-tier structure from the current 4-tier structure of GST, which comprises 5%, 12%, 18% and 28%. At present, items like butter, ghee, fruit juice, almonds, footwear below 1,000 bucks, solar heaters, processed food as well as budget hotels attract 12% of GST rate, and the discussion is underway on whether to move some of these essential items, sensitive items, to the lower bracket, which is 5% of GST, and the non-essential and less sensitive item to the upper bracket, which is 18% of GST. Another discussion is also underway to retain the existing rates of GST, and the view among some states that we should not tinker with the existing GST rate, and perhaps will shift gradually and merge gradually to these rates towards making the whole structure simplified. However, it is very important to note here that these entire discussion are in still in the deliberation phase, and any decision in this regard will be taken by GST Council only whenever it's meeting and taking up the matter.
We also spoke to Abhishek Rastogi, lawyer and founder of Rastogi Chambers, and he believes that a 3-rate structure of 0, 15 and 30% would be ideal for GST. He added that the rate rationalization will reduce classification disputes as well.
Once this rationalization happens, then the consequential effect would be that there will be lesser of disputes. Today, there are a lot of disputes between classification of goods and services, whether these would fall within the category of 5%, 12% and 18%. Now, if this rate goes away, the classification disputes will also be reduced. That is one. I don't think the arithmetic will go against the revenue. They would do that arithmetic calculation to, ensure that the revenues do not dip. So that should not worry the revenue at all. But I think in the long run, this rate even of 5% must go off. So I think what we must have is a rate of exemption, 0%, maybe about 15% rate on all goods and services, which would have about 80% of the goods and services covered within the tax slab, and 30% rate. So I think ideal situation would be 0%, 15% and 30%, 3 rates, that's all.
And now a quick update coming in with regards to the very contentious and significant relationship and conversation going on between India and the United States. Sources are in fact telling NDTV Profit that there is a breakthrough in the India-US trade talks and a deal is expected by the end of this week. Let me quickly go across to my colleague Rishabh for all the details.
Right. What we're picking up on this mini trade deal is the fact that it is set to come out within the next 2 days. That is between July 4 and 5 is when we can expect this mini trade deal between the US and India to come to fruition. This is significant because it was imminent that a deal was reached before July 9th, which is the tariff pause deadline that was imposed by the Trump administration. What we're also picking up is that this deal might only feature broad-based tariff reductions. So this is significant given the July 9 deadline. And it might not feature any sort of sectoral relief in terms of the sectoral tariffs that were imposed on Indian exports with regards to steel, aluminium, as well as auto and auto components. What will also perhaps be left untouched currently in this first tranche or in this mini tranche is the dairy and agri part of this trade deal. That is something that might be picked up at a later stage, given that there is another tranche that will be negotiated and finalized around the September-October mark. And then the full and final trade deal will be decided at a later date. So that's what we're picking up over the next few days. There might be 4th of July fireworks back here in India as well.
Meanwhile, CII President Rajiv Memani says India seeks a balanced US trade deal, rejecting high tariffs. The Commerce Ministry's detailed prep addresses India Inc.'s challenges, and tough issues like agriculture will be tackled later in phases. Let's hear that reaction coming in.
The Indian industry's view has been very clear. When we have engaged with CII members, I think we are not looking forward to a 25% tariff. It's not just the tariff, it's also relative competitiveness with other countries. The level of preparation that the Ministry of Commerce has done and the engagement that they have had with industry, the engagement that they have had with various ministries, including the Ministry of Agriculture, has been very detailed. So I feel very confident that they understand the challenges that Indian industry and particularly some sectors which you mentioned, agriculture and dairy, have, and those will be adequately addressed. As long as we get a balanced, fair, reasonable FTA, and we also believe that this FTA will be done in tranches. So it will not be one, I think it will probably be done in phases, and those areas which are more tricky, which require more consultation with stakeholders, have greater political ramifications, may be dealt with later on.
And it's another top focus this evening. SEBI is turning up the heat on stock market manipulation, launching an aggressive crackdown on unregistered finfluencers peddling tips through WhatsApp and Telegram. The regulator is teaming up with major social media platforms and deploying advanced surveillance to weed out pump and dump scams and protect retail investors from fraudulent advice. Let me quickly go across to my colleague Charu, who has all the details.
Very important story here because social media platforms, which are typically used to connect to more people and reach out to masses, are being used by unregistered investment advisors, finfluencers, to sort of lure a lot of people in on the pretext of high profits and get them to lose their money. Now what is happening here is that SEBI found that there's a lot of volume of such entities operating on YouTube channels or on Telegram channels where they're giving unsolicited advice on stocks and leading to a lot of cases where retail investors end up losing their money or get taken for the ride because they do not know either better or they get lured by the promises of very high returns. SEBI is currently in the process of investigating several such cases and is also in touch with these platforms to get more information about these cases. We have also come to know through several sources that about 3 to 4 of these cases are going to be seeing their completion soon, as there will be an order in the next coming months, and we are still on the story and we'll let you know what happens next and how further developments roll out.
That's right, and we will be discussing this on The Big Question this evening at 6 p.m. and at 9 p.m, so tune in. And moving on, the high-profile sale of the iconic IL&FS headquarters in Mumbai's Bandra Kurla complex has hit an unexpected roadblock. In a dramatic twist, IL&FS has approached the National Company Law Tribunal seeking to cancel the 1,080 crore bid from Canadian asset management giant Brookfield. Now, the move has thrown the marquee deal into uncertainty, raising fresh questions about the future of one of Mumbai's most valuable commercial properties.
We are here in Mumbai's BKC, and behind me what you see is the IL&FS headquarters. Now remember, this building was supposed to be handed over to Brookfield in a 1,080 crore deal, and now IL&FS has moved NCLT seeking to remove Brookfield as a successful bidder. Now the bid required Brookfield to maintain performance guarantees till a definitive agreement was closed. The performance guarantees would have been in term of demand drafts of somewhere around 108 crore rupees, which Brookfield was supposed to mandatorily renew 15 days prior to the date of expiry of the previous demand draft. Now Brookfield has been doing this for some time, but as of April they have failed to renew the performance guarantee. Now IL&FS has sought to remove Brookfield as a successful bidder for this headquarters in Mumbai's BKC. Remember, BKC is a premium business district in Mumbai and houses prominent offices of domestic and multinational companies. Now the case is going on in NCLT, and NCLT has said that as of now no third party rights can be created on this building that you see behind me, which means no one can come in and lease a property, no rentals, no income anyway as such, and the property continues to remain vacant. Now we have reached out to Brookfield. They have said they don't want to comment on it as the matter is still sub judice, but do stay tuned as we bring you more updates.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your...
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Anushi Vakharia. And you know, defense is the big theme that's playing out, right? We had one defense counter coming in yesterday giving us extremely strong guidance and therefore warrants better discussion. And today, therefore, we've picked IdeaForge as the company we want to discuss and talk about and speak with as well. So let me quickly first talk about what I want to know with regard to IdeaForge. I'm going to start off with point number one being execution. One thing is having an order book which is large, but the second piece is what's the visibility with regard to execution, and we'll talk about that. But more importantly, it's also the order book build up which is necessary. What's the outlook like with regard to orders coming in? Have that improved in some fashion? And what's the outlook like going forward? Now, in terms of margins and profitability as well, where do gross margins stabilize at? Where do EBITDA margins stabilize at? And we're talking maybe not FY26, but we're talking maybe the next 3 years and the next 5 years. And that gives us better visibility on whether this one can actually be something that stands out within that defense space and within the private defense space, mind you. Can they stay ahead of competition with regard to the fast evolving technology that's playing out in unmanned aerial vehicles, which is the business that they do? What's the outlook with regard to overseas markets? They've spoken enough and more on all of their con calls about expansions into Oman, opportunities coming out of North America, Africa. They've spoken about the large India opportunity coming out. How quickly does that translate both India as well as overseas, but more importantly overseas? Improvement in working capital parameters. Now, this is one of the other key drags in terms of the way the financials are playing out. You're seeing a sizable amount blocked in working capital. So these are all the points that I would want to know first off from IdeaForge, but we'll start off by understanding the business first. And it's critical to understand it because you want to understand whether there's a differentiator in the business or not. One, it's in the business of manufacturing unmanned aircraft systems. In simple terms, it's UAVs, which is unmanned aerial vehicles that they manufacture, and they're a leader in that market in India at the very least, and even abroad. From the commentary that they are suggesting, they're saying that they have in the pipeline and plus already ratified over 70 patents within this space, and therefore they are a leader in India but also looking to push with the global expansion that they have. Execution nearly completely depends on the order book is what they have suggested at the end of their Q4 con call, and therefore will be important to understand as to how both of those play out. But something from a business perspective that you must keep in mind: execution entirely depends on order book. Let's talk about the use case now. I'm going to start off with civil use. Surveillance, security, patrol and municipal. That's the broad breakup in the civil use segment. Then it's used within the mapping segment. In the mapping segment, land surveys, minings, estimations both of area as well as depth within certain civil and application use cases. And now then you have these four, which is largely to do with defense: anti-terror, border security, coastal security, crime patrol. Municipal cases also involve traffic management. So there are plenty of cases, right, of using UAVs, and therefore there's no lack of that. But these are the broad-based applications where IdeaForge has a presence. But you want to talk about some of the business verticals and how they're split.
Yeah, absolutely. So, you just emphasized on the last part about how they're catering to the defense side of the business. But from FY22 to FY25, if you are looking at the mix from the defense, that has come down significantly. From what was 80% of a mix has now moved to almost at the range of 60%. While for civil has seen almost a uptick of 20%. On the other hand, 20% was the mix earlier, which has now moved to 41%. Now, that's the kind of mix that we are looking at. But, let's talk about the broader products also which are there. First is the Zolt, which is a tactical drone that we are looking at. Most of the company products range in catering to the drone solutions that we are looking at. Along with that, we are looking at Yeti, which is a middle mile high altitude log drone as well. Now this drone is an important update that we are seeing, which is the Switch UAV services, which is declared as fit for Indian military usage. Now, just in the recent conversations, the defense industry had pointed out that there's a lack of drones in terms of where the military usage is concerned. So this one is an important one to keep an eye out for. Netra 5, another one, along with Flight, are some of the other drone services which are available from the company that we are seeing. Right, Harsh?
Yeah, absolutely. So Flight is actually their drone as a service offering, which is more of an annualized revenue, I would assume, but we'll quiz management on that as well. And more importantly, I want to also cover Yeti, because Yeti is something that they've been working on for the last couple of years. It's a middle mile high altitude logistics drone. So it's actually into logistics and delivery services. That's what Yeti is all about. So again, it's a very interesting concept which they are working on. So there's no lack of innovation here. That's what I'm trying to get to. There's plenty of innovation happening. Zolt is of course the tactical drone, and Switch UAV is the only one approved by the Indian Army, and therefore it gets a lot of validation in terms of its ability to be able to deliver high quality army grade equipment, which is what the big positive with regard to Switch UAV is all about. So that's the broad split. And in terms of how the order book has shaped up, FY25 end, the order book was at just about 14 crore. They've got new orders worth around 137 crore in this quarter, Anushi, if I'm not wrong.
Yeah.
And then there's an L1 order opportunity of around 400 odd crore. So that's how it really stacks up. Now in terms of numbers, and we'll start off with the KYC metrics right off the bat. Let's talk about the metrics that we'll speak about. We'll start off with the income statement. Thereafter we look at the balance sheet, we look at the cash flow, we look at shareholding, return ratios, street cred, we look at outlook, and we will look at valuation. So all of those parameters is what we'll try to cover today. Anushi, you want to start off with the income statement?
Yeah, absolutely. So with income statement, now you know what the basis is in terms of revenue. Now over here in the last 3-year period, it has almost been a flat performance as far as where the revenue visibility is concerned, which brings us back to the first point of Harsh's, just starting off with execution being a key part for the order book which is there. Even in terms of where the margins are, it's a negative kind of a picture that we are looking for margins in PAT as well. So, but the management is guiding for a 20% of plus of a blended margin going forward. So when does that flow in is something that we should be keeping a track of. Now order book, if we are seeing last year 13.6 crore was the figure that we clocked in, which is much lower than the FY24 and 23 figure of 124 to 192 crore respectively. Do note that it had been a lackluster year in terms of where the order inflows have been considered from the drone industry. So that is why we are looking at this kind of a figure, but emphasis more on the execution part remains, right?
Absolutely. And just to kind of take the viewers through the journey, yes, sales of 160 crore is flat when I'm looking at it over the 3-year period. But when you look at FY23 and FY24, we saw a spike on the sales numbers. In fact, top line was at 314 crore in FY24. So we've seen significant contraction in top line. This is largely because of order inflow not coming in a steady fashion. You look at the order book of just 14 crore at the end of FY25. That's of course the Q1 order book. But the FY25 order book stood at just 14 crore at the end. And therefore, there was not much of execution which was left to do. And therefore, what you're seeing is that the fixed costs are actually adding up. This is an EBITDA positive company otherwise. It's done 75, 48 and 57 crore of EBITDA in the last 3 years preceding FY25. FY25 was a loss, high fixed cost, high ESOP cost weighing down on the numbers for FY25, something that you must keep in mind, because otherwise on a normalized basis, the numbers don't look all that bad. But FY25 from an execution perspective was a weak one. From an order win perspective was a weak one. The orders that come in are chunky. The execution is therefore also chunky. And therefore, what you should look for in a company like this is over a 2-3 year period, what is it that they are delivering in terms of top line, in terms of margins, in terms of profitability. And it's not a 1 year thing. Therefore, again, something to keep in mind and some perspective. Let's now look at the balance sheet. And when you're looking at the balance sheet overall, it's not looking like a bad one. You're seeing decent amount of equity to the overall market cap as well. Around 2,500 crore of market cap, around 600 odd crore of equity. You're seeing borrowing which is far and few. So very, very low borrowing. But what's locked in really in the assets is 400 crore out of that 600 crore of balance sheet is locked in inventory, trade receivables, cash and other working capital items. So what you're seeing is a large part of that amount, and cash is obviously good. 97 crore of cash is good. But outside of that, the around 250 crore of the balance sheet is locked in some of the working capital requirements, which is large. And that's a bit of a concern. Neutral from a balance sheet perspective. Cash flows.
Now, in terms of where the cash flows are also, we are looking at a negative figure for cash flow from operations in FY25 in comparison with your FY24 picture that we are seeing. Again, a big result of this is also the kind of revenue recognition which has taken place. We've seen a downtick in terms of revenue almost at the likes of 40% or so in FY25, which is reflecting in cash flow from operations. There had been an increase in terms of receivables which were there, so which has resulted in this negative figure that we are looking at. Even net cash flow down minus 152 as compared to a positive 164 crore that we'd earlier seen. So on basis of that, we are also giving cash flow a neutral rating.
Okay, so neutral on cash flow, and that's also because of the build up in receivables which are not unwinding, the build up in inventory which is not unwinding. So some of those need to unwind, and maybe we will see some of that come through. But yes, that's still awaited. Let's now talk about return ratios, and this is a fascinating one, right? You had return ratios at 40% in FY22, and I want to again pull out and highlight that FY22 was a very solid year for the company. The operating margin or EBITDA margin of the company in FY22 was 47%. Chunky orders, right? Something to look out for. But that has tapered down. ROEs are now negative in this year, and we've highlighted reasons why. But otherwise, does the company have a capability of going back to higher ROEs if the EBITDA margins recover? And we spoke with management, we'll give you that perspective. So therefore, the neutral with regard to return ratios. Shareholding, Anushi.
So in terms of where the shareholding is concerned, not much of an activity that we're seeing in the last 3 quarters or so. Promoters' stake has remained at the 29% of a mark that we are looking at, while FIIs have trimmed their stake from 3.5% to 1.56%. So in that 1% of a range is what we are seeing. DII is playing around the range of 2 to 2.5% is what we are seeing, while public holds about 67% of stake in the company. So on basis of that, we've given a neutral rating to this one.
Okay, let's quickly look at street cred now, and this doesn't look pretty at all. Let me be very frank. 11% down in the last 6 months, but even when you look at it since the day of the listing, stock is down 56%, down 29% on the last 12-month performance, and therefore clear thumbs down with regard to this one. It's looking very difficult from a street cred perspective. You want to talk about valuations, Anushi?
Right. So in terms of where the valuations are, we've just discussed that, in FY25, the company had clocked in a loss in terms of where the EBITDA was concerned and net profit was concerned. So to get a better perspective for comparison, we have taken the market cap to sales approach for this one. If you look at IdeaForge over here, it has a multiple of 15.4 times. This is based on its FY25 sales number that we are looking at in comparison with Paris Defense and Zentech, who operate in similar spaces, which have about 18.8 to 18 times of a multiple is what we are seeing. So we are giving it a neutral on basis of that number.
If execution were to improve and if margins were to improve, you could well see this number change. And that's something you want to keep in mind, and which is why we're giving this a neutral, because the upside to this could well be good because the base was higher and it's come off very sharply due to whatever macro factors. Could that change is the question. Let's look at outlook now. Government expected to drive procurement as well as drive the larger market size. Expected EBITDA margins of 20% plus is what they've guided for. Blended gross margin of 45 to 50% is what they've guided for. R&D capex of around 77 crore annualized for FY26 is what they've guided for. First demo of the US defense drone is done. Now they need to try and work more, get their early adopter out of the way and start getting orders. That's the US expectation. Do not expect to take on debt. Expect a soft Q1 FY26. This is basis Q4 commentary. And execution readiness. They are waiting for order inflow is what they say. But we spoke earlier with the CEO of IdeaForge, Ankit, and here's what he had to say. Listen into the whole conversation. I want to first talk about the 150 crore order pipeline that you have. And I'm not asking with regard to Q1 FY26, but for the full year. What's the outlook like? How quickly can you execute this order book? Because your capacity utilization, at least basis Q4 commentary, suggested you can execute fairly quickly. So trying to understand that.
Yes, absolutely. I think the attempt and the target is to execute it as quickly as possible insofar as this is concerned. And we are going to essentially, do it also not just because we have capacity, but I think it's also a very immediate need for our country. So our focus will be to get the capability in the hands of our user as early as possible.
Hi, Mr. Mehta. This is Anushi joining in as well. So last year, if we take the order book in context, it was around 14 crore that we saw. This quarter, you recorded more than 100 crore plus of an order win. Just want to get a sense from FY25 to 26, what would be different in terms of where the order inflow picture is considered, and how do you expect to close the year with the FY26 order book? If you can give us more details on that front.
Yeah, so I think, Anushi, if you look at what has been announced recently regarding the next emergency procurement post the Operation Sindoor, Indian Army has been given a 9,000 crore budget to quickly induct more technology, particularly replenish what was consumed, as well as induct more technology in their ranks and forces so that we can be more prepared for any eventuality. And therefore, we do expect that that conversion will also happen sometime in this year. And once those conversions happen, we will have to also rush to deliver the capability to our end user.
Mr. Mehta, if you can just quantify the numbers for us, if we can take from FY25 to 26, what would be the growth picture be in terms of where the inflows are considered? And also a sense from these 14 crore of an order book that we saw in FY25, where do you see this number heading towards in FY26, considering that you have a 400 crore of a visibility as well in terms of order pipeline?
Anushi, the visibility that I can provide right now is that there is a good amount of capital earmarked for purchase of drones and counter-drone systems by the Government of India. Having said that, how much of it will convert to IdeaForge's bucket is something that we will sort of only talk about when we have those orders in hand, because, in this space, it is very important to be a bit more conservative in terms of what we are projecting because of the vagaries of the business and the processes.
Mr. Mehta, then give us a 2 to 3 year outlook, if not FY26. Because what your shareholders and investors will want is how quickly can you execute. The potential seems large at 400 crore of L1 potential, which you've highlighted. But how much of that converts is really the question. Again, on the Indian defense as well, the budget seems large, but how much of that converts to drones and specifically to you? Just give us that broad picture. It gives us better perspective.
Sure. So Harsh, what happens is that typically, the procurement for drones is earmarked within the overall budget that the government has. What we understand over the next 2-3 years is that there is an intent to look to buy this technology in large numbers and to buy it consistently. That's the view and the vision that we have from our forces. And therefore, we can expect that a lot of conversions will happen within the drone industry. Within the industry, we are not serving each and every use case. So we are serving the use case for ISR and we are serving the use case for multi-role assets. And within that, we will have to carve out, what is the picture that is converting for us. Our win rate within what is attemptable by us is usually very high, and we are able to grab a good market within that because of our capability that we've built, as well as now a new vector has come in, which is resilience to electronic warfare. That's an area that we've been talking about in all our calls. We've been talking about the technology that we're developing there, where we were working towards frequency hopping, multi-frequency communication. We've been talking about working on GNSS denied navigation, and all of these capabilities become very real and important and will become an integral part of what the government is going to buy. So we do find ourselves in a leading position insofar as that capability is concerned for the kind of drones that we build. So between these, 3-4 vectors, we feel very confident that we have a good possibility of converting a substantial amount of the pipeline for our domain in our favor. But what are the exact numbers, how many orders and how many units are the government going to procure is something that we'll only get to know once the RFPs are out and we start bidding for them.
Understood, Mr. Mehta. So this is in terms of where the order conversion and execution is considered. But if you take the order book visibility, it is very important to focus on that, considering that if you look at the last 3 years of revenue growth, that has been more on the muted side. It's almost flat. So just want to get a sense on the revenue visibility also for the next 2 to 3 years. What is the kind of growth? Is it a double teen kind of a growth, or more than that growth can we expect? And the margin range also, because if we look at the margins, there has been variation in terms of whether quarters or the financial year performance has been. So give us a sense on these two metrics as well.
See, what we look at in terms of blended margins, Anushi, is that we are typically looking at between 40 to 45% of gross margin expectation on a blended basis from our pipeline. But please, account for the fact that when an individual opportunity closes, it may have a higher or lower gross margin depending on the nature of the competition in that bid and, what that product is all about. So, we should expect that individual opportunities that convert will have the variability, but on a blended basis, our margin expectation remains the same. And yes, we can expect growth in this year. We do expect conversions from our pipeline, both the L1 pipeline and our opportunity pipeline, which is significantly larger than the L1 pipeline as well, to happen this year and subsequently in the forthcoming years as well, from whatever we understand of the intent of procurement by government, particularly in defense. And we are seeing that a lot of work is also going to happen in the homeland security and in the civil domain as well. And therefore, on a overall basis, we believe that India is going to see a rise and a better, opportunity for the industry as well as for us in the next couple of years and beyond. And we expect that in this time frame, we will also start responding and start receiving orders from international markets. So overall, we expect growth from this overall diversified approach of what we have been planning and what we've been building towards over the last couple of years.
But again, coming back to the numbers, what can we expect in terms of top line? Is there a broad level thought process, given that now you don't just have India to look at, or maybe an election year which will drag your numbers? It will be global. You have traction coming in from Europe, UK. You have now a decent presence in North America as well. You've started ramping up there as well. So you've got diversified presence. Is there better visibility on top line, sir?
See, there is better internal visibility, but for me to talk about it, we're not there yet. Let me put it this way.
Okay, sure. And are the margins in exports better than domestic?
See, we are currently pitching, the more capable products in the international markets, because we believe that differentiation is very important when we go out there and we present ourselves as a credible player, because, if we are looking at the run-of-the-mill capability or performance, then, there is a lot of competition everywhere in the world. And therefore, because we are pitching our premium products there, we should expect good margins and healthy margins there. But we will only sort of, know when we convert some of these opportunities in practice.
Sorry,
but there is a tight governance happening on that. We should expect closures as well.
Right. I want to close the loop with regard to margins. So you're guiding blended 45 to 50% blended. Where does
but it doesn't show up. So Harsh, sorry to interject. It doesn't show up year on year, because in a particular year, if I have a specific, like it happened last year.
Yes.
So the idea is that, typically the pipeline looks of that nature, but what converts in the pipeline will show up slightly differently. We've had years where we have much better margins, and we've had years, particularly 1 year last year, where we had slightly more muted margins. So it depends on what we are executing in that year more than anything else.
No, for sure, Mr. Mehta. So we've explained that to our viewers as well. So that is well recognized. But say you're at 45.